All right, yo, what's up for y'all watching this on the YouTube replay? The market closes in 40 minutes, and we do have some fun earnings to look at. We already had a lot of companies report earnings this morning and yesterday. I want to go ahead and show you some of the big losers that we have. Ticker symbol Dave reported earnings this morning. The earnings were not good, unfortunately. AMD's down 6, Super Micro's down 18, so also disappointing. We had 5 companies report earnings today, basically. So Disney reported earnings. I like Disney's earnings, and Toast as well. So those stocks are down. Is anything up on the day? Hey, dude, Reddit continues to win after their phenomenal earnings streak. Hey, and another stock I've kind of been talking about is Progressive. So this is one I think that is a good buy and hold for the long run stock. So I have 3.8 shares, and then I bought some shares a little bit more right down here on the dip. So kind of announced that buy. So obviously, let me pull this up again. Dude, Reddit up 6%. Man, I'm glad I didn't sell out of this one because Reddit has just been crushing it. Every financial metric on Reddit is just beating it. And also, I want to show you the earnings that we have later today. Let me go ahead and show you that. In literally 40 minutes, we have the earnings from, these are all the companies that already reported. Novo Nordisk, Disney, McDonald's reported, Uber, Shopify. But here are the post-market earnings. We get AppLovin, DoorDash, not really any more popular ones that I'm seeing on here. So mainly AppLovin and DoorDash. So I guess those are the earnings that we're waiting for. And I guess we'll see what other companies report earnings. And let me go ahead and show you how my Moomoo portfolio is doing. Oopsie. So this is my buy and hold for the long run portfolio. So kind of once I buy a stock in here, I try not to ever sell it. I just try and hold it forever. And these are all the stocks that we own in here. One stock that's doing surprisingly good today is Amazon. I decided to buy a share yesterday after this huge dip, and it's recovered weirdly fast. So hey, I'll take that. I guess on that one share I bought, I'm up 3% on that one share. Yeah, what up, Ryan? He says Apple doing good. What's wrong with my SMCI? Yeah, dude, Ryan, SMCI crushed my Weeble portfolio over here. And yo, what up, Destin? Do you like Texas Roadhouse or Sprouts Farmers Market more? Well, they're in two different industries, but I like Sprouts Farmers Market more. I think they'll probably do better in the long run than Texas Roadhouse, but I still like both of those companies. But if I had to pick one, probably pick Sprouts Farmers Market. So yeah, the RIP Super Micro, and we have some other companies that reported here in my Robinhood portfolio. Yo, Zio, no way, dude. Thanks for the rose, man. I do appreciate that. But McDonald's reported earnings, and I actually just got back from McDonald's. I celebrated. I just got a milkshake and 2 McChickens. So, had to celebrate at McDonald's today on earnings, and we're up a nice 3.77% or $158. What's cool about McDonald's is actually the dividends that they pay. Actually, people don't really know this. McDonald's is really a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to McDonald's Corporation, this stock right here, as a high margin royalty. McDonald's doesn't really have to do any work for it. They also own the land under 80% of the stores in the US, so they have a huge real estate portfolio. Also, in my Roth IRA, we had one company report earnings in here, DCTH. Originally this morning, they were up 19%, 20%, and now they're only up 3%. So I wonder why this one gave up a lot of its gains. The earnings are really good. And also another weird thing, ticker symbol Dave's earnings are really good, but the stock still fell anyway. Let me go pull that up. Yeah, here's some of the stocks that are doing really good today. Astera Labs, Zeta, Shopify, man. I knew Shopify would continue to win. Arista Networks, and some of these other companies right here. Hey, Weeble's up 5%. So let's check this one out. Hey, yeah, what up? We can look at Zeta. So yeah, this company just reported earnings. Let's go look at the earnings, see what they were. So the orange line is what the analysts were expecting. So we could see right off the bat, they beat on revenue and they beat on net income and they beat on EBIT. So it was a triple beat. So investors are really happy with their performance. And yeah, they're super close to net income positivity. It was 54% better than the previous year. So everything is trending in the right direction here. Revenue's up 35%. Balance sheet looks good, so that's an interesting one. Nice if you owned them before today. Hey, nice, perfect timing, Zio. Heck yeah. AMD also reported earnings. I do want to show you why I think AMD fell because I analyzed them and I started to find out what the reason was. There was some really good news and also some really bad news about AMD earnings. So Here's my position in them. I'm still up 30% all time, but yeah, we have 11 shares of AMD, and here's why I think they fell. So first off, we know they obviously have a huge GPU market share, 17% PC GPU market share. A lot of the huge growth has come from the data center business. It's up 60% year over year, ridiculous year over year growth rates. It's now half the business. Data centers need GPUs, and AMD can just use them themselves. They have their own products. But here's the part that I think is why they fell. This part is great. The revenue net income is great. So look, revenue's up 31. Net income was $1 billion nearly, up from 300 million. Really good gains in the net income. And look at this free cash flow as well. The free cash flows of 300%. So all these metrics are doing great. So why is the stock falling? It's actually something to do with the operating profit. I don't know what happened right here, and I'm still looking for a reason, but the operating profit was negative 134 million, which is very weird. It shouldn't be. Also, I love AMD's balance sheet right here. I mean, no net debt on this company. Yeah, this cash flow growth is nuts. The CapEx was good too. They invested 2.3 bill. So I need to find the reason for this operating profit loss, but yeah, I think that's why they're falling. I don't know. Let's see, SMCI, let me go look at SMCI earnings. I actually haven't really looked at them, but I can probably assume they're not too good. Oh yeah, do you want me to look at Texas Roadhouse or Sprouts Farmers Market? We can check that out, Destin. But yeah, dang, they're down 20% on the day. I do own this one, so hey, I'm not too happy about that. But yeah, let's see how they did. So revenue, they missed on revenue, they missed on net income, and they missed on EBITDA. So they triple missed rate, and the margins continue to collapse. So if we look at the revenue is up 7% year over year, holding on to this 150% growth from the previous year, but the revenue is up 7.5, but the net income's down 34. So what does that mean? In English, basically means the margins are collapsing, fell 40% year over year. And I think they kind of had run up already too much. So that's kind of why they fell. So we want to see the net income go up. That's really hurting their PE ratio. Let's see here. BLSA. Yeah, hey Alex, what ab? Yeah, hey, thanks, man. Cody. If you want to get this little software I'm using, this broker, it's in the link tree in my bio, that first link there. So let's look at Sprouts Farmers Market. This is a kind of healthy grocery store, and I do own this one as well. So if you go back over here, and here's my all-time performance. Yeah, we're down 2.2% on the day. We're up 13% all time. So on the all-time, we're doing pretty good. But one company I do own that reported earnings a few days ago was actually Sprouts Farmers Market. And this one has actually seen some pretty monstrous performance. That blue line there is my position. I own 7 shares of this stock. But let me show you what you want to look at when you're analyzing a grocery store, because grocery stores are really low margin businesses. Like a Kroger has like 1-2% net margins, but check out Sprouts Farmers Market. They have a 6% net margin, and that margin grew 20% year over year. They had an 8% net margin last quarter. Pretty good. I mean, this net income growth is ridiculous. Actually, they're also a super buyback friendly company. So check this out. Here's the power of the buybacks. Y'all will like this. If you look at the net income year over year, it's up 40%. So the net income grew by 40, but the earnings per share, your return as a shareholder, is actually up by 43%. So you own 3.6% more of the company from buybacks than 1 year ago. So they're also a buyback friendly company. I love that. Yo, Theo, what's up, man? Thanks for the sub. I appreciate you, man. Yeah, if you guys got any stocks you want me to look at, let me know. I'll check them out for you before earnings, because in a little while we have AppLovin. What was the other company? DoorDash. We have some other companies reporting earnings. I forget them, but we got some earnings, and already we had some stocks report today. Powell Industries, I'm actually surprised, is only down 4%, because this morning, right when they opened, I had like a heart attack. They were down like 12%, but they went from they opened at 209, and now they're chilling at 225. So it's recovered a lot, so that's good news there. Yeah, here's my portfolio on the day. We're up barely 0.17. Let me see how the Webull portfolio is. This portfolio right here is down a good chunk. Is AMD still a good buy? Not yet. I don't think. But yeah, here's our all-time in here, up 13%, but we're down 2.25% on the day. Again, these are huge losses from Dave, AMD, Supermicro. I just love being fully transparent. Also, Disney reported earnings this morning. I don't know if I should cover Disney. They're really boring. And McDonald's as well. I would cover more, but no one probably owns this stock here. And oh yeah, here's my main account right here. This is my main taxable account right here. And if you check this out, man, this April dip was crazy, man. If all you had to do was not sell, and your portfolio is probably doing really good. You look this at, we were at one point down like, what was it, 15%, but now we're up 10% year to date. And my strategy is pretty boring. I just buy and hold high quality stocks. These are all dividend growth companies. Every single stock right that you see pays a dividend right here. But most of them are like dividend growth companies like Meta, Google, CEG. These are like dividend growth companies. So let's see. What up, Greco? He said UAMY. Let's go analyze them. Let's check it out. What up, Crispy? I know I was surprised Powell climbed back. Yeah, numbers were okay. The revenue didn't grow that much. That was the bad news about Powell. I sold most of my buy. Hey, nice, Crispy. Let's see here. UAMY stock. What is this one? United States Antimony. Oh, hey, this one's on my watch list, actually. I remember. This is like the small cap that it's not a terrible small cap. So look at this. Remember this number here. The whole entire company, the market cap is 409 million. So the whole entire company is worth 409 million. Let's go analyze the financials right here. So Antimony is most of their revenue. Let's go. Revenue, yeah, look at that. So 7 million of revenue, but it's up 130%. Again, really small numbers. It's kind of easy to grow that, but they made net income on that. So they are barely losing any money and are trending toward making net income every quarter. And they have a fortress, pretty good of a balance sheet. So for out of all the $400 million market caps, that's one of the better ones. But again, you still got to be super, super careful with the really small market caps. I'm up 5% today from Shopify and Zeta. Yo, that's awesome, Zio. Shopify is one of my favorite ones out there. Can you check ALAB? Yeah, what up, Ahmed? Let's check out ALAB. Wow, up 28%. I think the stock's, all-time high today. So if you've ever owned this stock, you're definitely up on your money. So look at this huge beat. I mean, the orange line's what the analysts were expecting. They're expecting 172. They reported 192. A huge EPS beat, 100% beat on net income, and a huge beat on EBIT as well. So they really did deserve going up that much. This really did beat the analyst expectations. Revenue grew 150%. I mean, this is the growth you want to see in a company. And on that 190 mil of revenue, they made 51 mil of net income. I mean, this is ridiculous. What's the margins on here? Near 30% net margins. So Astera Labs, I can see why they're at all-time highs. The numbers were great. All right, TTWO, and we can look at PayPal too. Yeah. Oh yeah, we can look at DCTH. They barely went up on earnings, which was weird. And Dave, we'll check those two out as well because surprised they're not at more. But someone said TTWO stock, and yo, IXRN, thanks so much for all the roses, dude. No way, I didn't even see that for the 16 roses. I really appreciate that, IXRN. If you got a stock, oh yeah, can we do SoFi? No, we have not done SoFi yet. We'll look at SoFi too. Yeah, remind me. So here's Take-Two Interactive right here. This is the company that owns Rockstar Games. So if you've heard of GTA 5, GTA 6, Red Dead Redemption, that is owned by this company right here. So they have a bunch of gaming, companies that they make money from. And basically they have this asset known as GTA 6 that as soon as they release it, like they're so uniquely positioned, they have this asset, GTA 6, whenever they release it, it's just going to instantly bring them in billions of sales, billions of dollars. So the forward growth is really why this one has run up so much, because that's going to be a lot of future growth of GTA 6. They also own Red Dead Redemption, Rockstar Games, and I think The Sims. Yeah, it's like a gaming company. So yeah, dude, GTA 6, I can't wait for that game to come out. I see people like, they'll pay like $300. They don't care the price. Oh, so let's go look at PayPal right here, and then we can look at some of these other ones. Yeah, try not to spam here. We'll look at OXLC. I want to get to all these right here. So, wait. Oh yeah, wait, no, we got to look at SoFi first, because thanks again, IXRN, for all the roses. So check this out. SoFi, I believe this one is a great buy and hold forever stock. I mean, they're so growthy, and I do own them, so I might be biased when I say that. I regret every share I've ever sold of them, but I have 24 shares of SoFi left, and this is why I think they deserve to be at this high price right here, and I think they're just going to continue to win as well. So check this out. If we look at their financial services revenue, which is like the main growth driver here, because they're a fintech, they have their own banking charter. This has seen some pretty ridiculous growth. I mean, it's up 101% year over year. So the revenue just in this segment has literally doubled, slightly more than doubled year over year. So this growth rate, that's just ridiculous growth. Also, lending business up 25% year over year. Still, both segments of business are growing like crazy. Total revenues up 42, and on that they made $100 million in net income. So people are really starting to take SoFi serious. They're making a bunch of profits. They're super growthy. So that's why I think they deserve the high premium. Ooh, let's see here. So OXLC, I think this is like a dividend trap. I might, we'll analyze this. We'll see, is their dividend safe? So Oxford Lane Capital. So look at this. This stock, yeah, so this is just not the kind of company you want to own. So look at this. If we go to the dividend yield, or maybe there's no data here for me to look at. This might be like a closed-end fund. Yeah. Okay. Anyway, they have a crazy high dividend yield, but look, the stock's at an all-time low. So you got to be careful with this one. It won't really outperform in the long run. And look at that recent, yeah, be careful with this one. I think they just have a really high yield. Oh, yeah, look at this down here. A 32% dividend yield. Too good to be true, in my opinion. So, it's $3 for one share. They're saying they'll give you $1 back. Anyway, it seems really risky. Let's see here. How do you feel about leaps? Yo, Ethan, what's up, man? I don't really do options, but if you're good at them, let me look at Tempest AI. Lo, what up, Eunice? What's up? Hope y'all are having a good Wednesday, by the way. So check this out. Here's Tempest AI. This is a company owned by Nancy Pelosi and her husband. And they're actually pretty cool. So check this out. If we look at the industry they're in, the genomics right here, it's actually grown like crazy. Check this out. It's up 88% year over year. So if I'm looking for a stock to buy and hold forever, this is one I could trust because of the growth. And also the data and services part of the business is also up 44% year over year. So crazy good growth on Tempest AI. Got to be careful of these net income losses, but it is starting to trend better. But this growth of the sales is really the big winner here. And look at this, the deleverage of the balance sheet. Look, they used to have way more liabilities than assets, and now in the most recent quarter, they have more assets and liabilities. This looks great. So anyway, Tempest AI, they're super growthy. I don't know why they're so heavily suppressed right now. I think they might go up. I got to do more research on them, but. So Crispy said DCTH. This is a company that reported earnings this morning, and they're a super small company. Normally one I wouldn't recommend, but, again, none of this is financial advice here. We're down 5% on the position. If you do want to put a position in the stock, you cannot have it as a huge chunk. Like, it has to be a super small, insignificant position where if it goes to zero, it won't hurt you. But look at this right here. Here's what I find really interesting about this one, why I think the risk reward is pretty good. If you look at the market cap, they're a $380 million company. So remember that the whole entire company is worth $380 million. And dang, they did 25 mil of revenue, made net income and EBIT. This is great news. Is it updated? Yeah, look. Oh, no, it's not yet. So they just made 25 million of revenue. I mean, it's literally up from nothing. So record quarter revenue. Again, it's not here, but they triple beat on every metric. I'm surprised they're not at more. Also, remember, they're a $360 million company. They have no debt whatsoever, literally debt free, with $60 million of cash. So mainly this is like a cash financials play. So that's what I like about DCTH, although you got to be super careful with that one. I own OXLC and PSCC. Yeah, JG, you got to be careful with those. They have nice dividends, but they might be at risk. So someone said, hey, you should check Dave stock. Yeah, hey, Kevin, check this out. We are down bad on ticker symbol Dave today and Supermicro. I'm always being fully transparent. So if you got any questions for me, let me know. Reddit's doing great today, but yeah, look at this. We're down 18% from Dave, 7 from AMD, 19 from Supermicro. But let me analyze Dave right here. I don't know why this one actually fell so much, because the numbers they reported were incredible. They rose their guidance by a huge margin. Just look at this. Revenue of 130 mil. Oh, but this net income missed. Actually, this must be why. Net income did not meet the expectations. The EBIT did, though. So maybe this was some one-time adjustment. But again, they reported earnings just a couple hours ago, so it's not updated down here. But it is updated right here. I'm going to analyze them when I can actually dig into the cash flow statement and stuff. But at first glance, I think they're oversold. I don't know why they're down so much. So when SoFi reached 45, I don't know, honest, but that'd be great. Yeah, the DCTH numbers are good. Hey, what up, Joshua? I missed the Powell entry. Woke up at 11 a.m. Yeah, that's what I'm wondering, Joshua. So another company that reported earnings today is POWL. And check this out. This morning, I panicked because it fell literally it opened at $209. It was down like 13%. Now it went from 209 to 229 right now. So it's up at 10%. Wow, yeah, it's up 10% since the low. So anyway, that's kind of I'm actually shocked because just earlier this morning I was down over $300 just on that stock. Now I'm only down 85. So let's go. Another company having a really good recovery day. You see this is Amazon. I actually bought a little share of it, about one share of Amazon yesterday after this huge dip, and it's had a nice little day up 3.5%. Also, in exactly 30 minutes, we're going to get earnings from AppLovin and DoorDash and a few other companies. Yeah, Connor, RIP Dave. I feel you on that one. So, yeah, IXRN, thanks again for the roses. Let's check out APLD. I think this company mainly just had a huge partnership with CoreWeave. So if we go to the NVIDIA portfolio, and NVIDIA owns that stock. So that's kind of why a lot of people like this stock right here. It's 3.35% of NVIDIA's portfolio. It's in APLD. And basically, they rallied, they gapped up on earnings. Like, actually, look, this day right here, they gapped up on the CoreWeave partnership. And now on earnings, they're gapping up again. So earnings were good. They had some good guidance. And again, just because NVIDIA owns something doesn't mean, you should. But I got to do more research on them. I don't know too much about them, but they're like a data center hosting business and a cloud service play. Um, let's see. Do you think David's a buy? I think it's worth nibbling down here, Kevin. Yeah, but I could understand if it falls more, but I think 20% seems way oversold. Do you buy shares or options? Dude, I actually don't have any options right now. I don't own any crypto or do options. My strategy is really boring, actually. I mainly, and this is all I do, I just buy and hold great high quality companies and just hold them on for the long run. Let's see, we're up 0.2% in this portfolio on the day. My main winner is McDonald's, man. McDonald's is up 3.5. It's a boring day when McDonald's is the biggest winner. Actually, I think Amazon's doing really good. Uh-oh. What up, Catherine? All right, let's see here. Palantir, what up, Neo? Let's check out Palantir. Yeah. Yo, what up, Short? What's up, dude? I'm praying on DoorDash's downfall. Oh no. Yeah, Uber reported this morning, and Uber's slightly down. I might actually look into Uber's earnings. Yeah, we'll look at Uber after this. Mustafa said, "What? Yeah, what platform is this? Yeah, hey, if you want to get this little broker I'm on, it's my favorite one for analysis. Go to the link tree in my bio, the very first link, if you want to get this software I'm using. It's an affiliate link too. It'll help out the channel. But anyway, let's go analyze Palantir. If we look at where the revenue comes from, half of Palantir's revenue comes from the government. These are all their government contracts. Like a lot of police stations use Palantir, and the government revenue is up 50%. Look at these year-over-year growth rates. The growth rate is growing too. It's up 49%. That's the highest growth rate I've seen. And not just the government revenue, but the commercial revenue as well, up 46. We haven't seen that growth in a while. So they had their first $1 billion quarter ever, I believe. Yeah, quarter crazy growth. Billion of revenue and 330 million, and that was net income. So it should be a 33% net margin. Yep. And they also have a monster of a balance sheet. So Palantir has no debt whatsoever, and we can just go to the balance sheet, see their cash. They have 6 billion of cash, up from 4 billion last year. Their cash pile just sets a new record every quarter. So they're retaining all the earnings. Anyway, I love Palantir. I just wish the valuation wasn't so high. That's the one thing. Valuation is pretty ridiculous, but again, they might deserve it because they're so growthy, so high quality. Let's see. Let's go look at Uber as well. So Uber, let's go look at their earnings because, yeah, look at that. RIP if you're if you have calls or puts on earnings, it literally did nothing. It's down 0.3. So let's go see how they did. Yeah. So at the top here, kind of this article, I remember reading it. It says they approved a $20 billion buyback over 2 years. So they're going to spend $10 billion a year buying back their own stock. So let's see, 2025 Q2, they slightly beat on revenue, pretty much matched on net income and matched on EBIT. So that's probably why the stock is flat. They pretty much met exactly what the analysts thought. So that's interesting. It hasn't updated down here yet. Unfortunately, this is still Q1, but this is Q2. So yeah, they just met expectations. Let's see here. Let's see. IREN. Yeah, that one's a super growthy one. I think this one might be crypto related. I don't remember, but this one, whenever I look at the revenues, it's super growthy. If you look, the revenue's up, or no, the stock is up 12% on the day. Pretty good. Was there any specific news? I don't know. IREN hits record revenue, expands AI cloud with thousands of new NVIDIA GPUs. Well, hey, that sounds good. So yeah, this is what I love about them is the growth. And this is the kind of company you probably want to look into ones that are super growthy. The revenue, after being up 230%, went up another 166%. So at this growth rate, what's the revenue going to be this time next year? So IREN is really growthy. And on this 144 mil of revenue, they made 25 million in net income. So that one's really good. They must have reported earnings. I bought a little more Uber. Hey, nice. Um, let's see. Look into inverse ETFs. Hey, there's SBIT, I believe. I guess if you're bearish Bitcoin. So if you look at Bitcoin right now, Bitcoin is pretty much at all-time highs, and that's why this is at all-time lows. So if for whatever reason you were bearish on Bitcoin, you could just buy shares of this and it inverses. But I don't really recommend those. Someone said Lyft. Oh, GHM. Yeah, we'll get to GHM. Don't worry, Connor. So here's Lyft. We look at Uber today, and DoorDash reports in 25 minutes. So in 25 minutes, we'll get DoorDash's earnings and AppLovin and a few other stocks. We'll see how the earnings are doing. We already had all the companies that I own that reported earnings today. Already did this morning, like McDonald's, Disney, Dave, DCTH. Those were all this morning. But Lyft is like the most profitable they've ever been. Like, look at this free cash flow growth numbers. These are the year-over-year growth rates. That they're going to be making like 300 mil of free cash flow a quarter, and they're making net income now. Because if we zoom out, this is why Lyft was a tough buy. They were burning, literally over $1 billion a year at one point, but now they're actually starting to make some net income. So pretty good for Lyft. And they're deleveraging a little bit. What that means is the liabilities are 1 year ago were 90% of the assets. Now it's 85, so it's a little bit better. All right, so let's look at GHM. This is a stock that I do own that had earnings and they fell. Yeah, you can kind of see, you can probably guess where they reported earnings. Yo, Atomic Joe, thanks so much for the little bat there for the gift on TikTok. I really appreciate that. So yeah, let's go look at their earnings because I do really like this one. I do own them. I'll show you my position after this. So yeah, look at this. They missed on revenue, not good. They huge beat on net income. They beat on net income by double, so they're growing their margins. And they did on EBITDA as well, so that's actually really good news. Wait, is this, so yeah, this is fiscal year, so that's why it says 2026 Q1, it means fiscal year. But yeah, 5 million in net income. Look at this market cap, by the way. Here's why I bought them. So I normally don't touch these small caps because look, the whole entire company is worth 535 million, but you're buying in at a valuation of 500 million. It's a $500 million company, literally making close to 5 million of after-tax net income a quarter. So that's the good news. Bad news is, I guess, the slowing revenue growth. I guess it slightly missed analysts, but there must be some other reason for them falling. But revenue grew 11. The margin expansion was the real winner. They won big contract. What up, Stonky? What do you think of Baker Hughes? What do you think of GTLS being bought out? Wait, GTLS. I haven't heard. Chart Industries. Oh yeah, look at that. So for wondering like why do these candlesticks look so weird? They're getting bought out by Baker Hughes. Very interesting. That one was on my watch list before they were getting bought out. What are your thoughts on DLO? Let's see, DLO, D-Local. So let's see here. This is a relatively small one, a $3 billion market cap. So that's not that big. So a $3 billion company, they do transaction revenues. And here's where the revenue comes from. So notice you're not really seeing the US or Canada on here. It's like South America, like Brazil, Mexico. Oh, and then Egypt, Argentina. So some kind of transaction company. Are they profitable? Let's see. So the revenue's up 17% year over year. So that's good revenue growth. What about the net income? Sorry, guys, my Wi-Fi is a little slow today. Here we go. So yeah, look at that. They are profitable. So actually good news. They made 50 million just this quarter. So they're actually making a good amount of money. All right, so let's see. Amazon, please. What up, Nicola? Yeah. Wow, we're up $100 today from Amazon. So I bought a share of them yesterday. I guess that was fortunately timed, but Yeah, Amazon reported earnings. They missed on the cloud business, and I actually don't think it's the end of the world. So basically, they lost 1% market share to Google Cloud and another 1% market share to Microsoft Azure. But this growth is still ridiculous. I mean, they're the number one market share. Revenue's up 17%. This is just the AWS business, by the way. Did you know just the AWS business does over 100 billion of annual revenue for them? It's actually the most valuable part of Amazon because it brings the most net income. Because the store business, the online stores are low margin. That one is higher margin. Yeah, Amazon's a great robotics, warehouse robotics play. I mean, such a cool company. Also, the thing people are watching on Amazon has really been the margins, and they're really growing their margin. Great news. Now double-digit net margins. If we zoom out, this used to be a tough buy a few years back. I mean, single-digit margin, negative margins. So it's great to see this real expansion of the margins. So great balance sheet as well on Amazon. But another thing that kind of spooked investors, but also I'm really happy with it. If you go to the cash from investing activities, it was negative 39 billion this quarter. What does that mean? That means they're investing in assets. Like they could have acquired a company. Amazon actually had a huge stake. They reported an IONQ. So for some reason, Amazon owns not much of it, like 70 million of this stock, or maybe it's a different one. I don't remember. But anyway, Amazon invested 39 billion in new assets or something like that. So yeah, interesting. There was some news with Zoox. You know what? I can't find the news, but oh well. Amazon's a perfect buy and hold for the long run company, I think. Oh yeah, my fault. Let's look at AutoZone right here. So AutoZone, we've probably all heard of them before. They're such a boring business, but how does this stock have such monster returns? I mean, look at that. It is just like a straight line up. They're at an all-time high literally today. How is this possible? Well, that's because AutoZone spends all their money buying back their own stock, and the PE is a 27. Whenever they buy back their own stock, that makes the PE ratio go lower as well. But check this out. Here's the power of the share buyback. So if we go to this right here, the net income fell 6% year over year. All right, so their profits fell 6%, but the EPS only fell by 3%. So that's kind of the cool news here. The buybacks were way more effective back here because I should just go to the total common shares outstanding, but like it grew 4% here, but it grew 10%. Look at the earnings per share, $35 of earnings per share quarter. Anyway, they just buy back their own stock like crazy because a normal company that has some of this like declining revenue and just flat revenue shouldn't really be at all-time highs like this. So they're so interesting. They're also kind of recession resilient. You get a flat tire, oil change, you're still doing that in a recession. You got to, so. What do you think of Shiba Inu? Hey, yeah, we don't really talk about crypto, so I wish I could give you thoughts on them. It's IONQ 37. Oh yeah, that's what I thought. Thanks, Adrian. Yeah, Amazon took a stake in this company. I thought they rallied on that news yesterday, but I guess not. Will it show us in the shareholders? Nah, so it's not showing us in the shareholders yet, so they're not a significant shareholder, but anyway. Yeah, buybacks are crazy on AutoZone. Same with O'Reilly. So let's see. Someone said Neff. What's up, dude? There used to be like a cool shirt brand called Neff. So here's SoundHound AI. I think this is more of a meme company, but they do have one business that really impresses me. So if you're a shareholder of SoundHound AI, there's only one thing you need to watch, and that's this subscription revenue. And I love subscription model companies. It's all reoccurring revenue, but check this out. The subscription revenue has exploded up 590% year over year, literally to a new record. So again, at this crazy growth rate, what's it going to be this time next year? So that's something that's really interesting to me. Yo, what up, Atomic Joe? Thanks again for the bat there. So let's see. Oh yes, the other thing, unfortunate for SoundHound AI, the royalty business. They used to have these high margin royalties. That business fell 50% year over year. So not great, but you're just watching the subscription revenue. I love that growth, So let's look at Innodata right here. This is another stock I own actually in my Roth IRA. I want to analyze this. Give me just one. I gotta grab my water bottle, but it's over here. Okay. Sorry. Jeez. Okay. So here's a company I own here in my Roth IRA. Then the market closes in 12 minutes. When the market closes, we're going to be looking at AppLovin earnings, and DoorDash earnings, some other companies report. But anyway, here's Innodata right here. I want to show you why I own this stock. And I'm up 30% on them. This one has had some crazy performance. If you look at them on the past 5 years, they're up 3,200% the past 5 years. I'm only up 30%. But again, you don't want to have a huge position in this stock. But here's why I love them. As you know, I love really growthy companies. And this one is super growthy. Check this out. They kind of do what Scale AI does, which Meta just acquired. This revenue, their digital data solutions revenue, grew 99% year over year to 50 million. I mean, these year over year growth rates is incredible. And this is all organic. Like they didn't acquire a company to get this, all organic growth, which is great news. And also, this net income is ridiculous. Check this out. So they're making millions in net income every quarter. Great news. Balance sheet's the best it's ever been. Deleveraging, after growing their assets, the liabilities used to be 57% of the assets. Now it's only 34%. So let's see the cash from operations. Yeah, crazy growth as well. So anyway, I really like INOD as a small cap play. They're like worth around $1 billion. They're not huge. Is there a way you can look at the bullish IPO? Let's see. BULL. Let's check them out. So, oh wait, what's the ticker symbol for that IPO? Oh, BLSH. Okay. What's the valuation? So at a $4 billion market cap. So this is actually a really small company they're IPOing. So let's see what they do. Global focused digital asset platform. So I guess we could maybe, there's comments. I guess we can read what the intelligent comments have to say. Anyway, guess we'll see what happens when they IPO. I'm not getting in that one. A lot of the IPOs have been on fire though recently, like Circle IPO. What was that recent one? Figma did pretty good, but now they're starting to fall. If you don't know the same person, and by the way, if you think of Bitcoin. What up, Short? Hey, I like that name there. I'm trading on MT5. Yeah, what up, HBS? I don't know what that is. What up, Shanks? All right, let's see. DCTH, yeah, had a good run this morning. Is a Fortive comeback. Hey, what's the ticker symbol for that one again? Wasinator, what's up? He said, can you give me your thoughts on GBDC? So this is a BDC, I'm going to assume, which is a business development company. Yep. So they just do loans and lending. And they're one of the few types of companies that literally by law, this company has to pay out 90% of their taxable income in the form of a dividend. So when we go check this dividend, I'm going to assume it's really high. So dividend, an 11% dividend. So they have this crazy high dividend, but it might be sustainable. But again, you're basically buying this to maximize your dividend income. You're not really going to outperform in the long run. Like this stock is down from 2019 and it's kind of the same price it was back in 2021. So yeah, you get the nice dividends, but you won't gain too much in share price. So yeah, good dividend play, but let's see. What do you think of Bill? Ooh, yo, I sold out. Let's see if they're recovering. I didn't even know anyone knew about this company anymore. So I had a huge position. I bought a bunch of this stock right here, and then I sold all my shares this day right here. Or no, this day right here. I sold all 11. I didn't have much. I had 11 shares. And then the next day, I sold it before earnings. The next day it crashes like 50%. And then I bought one share, sold that one share. Anyway, Bill is unfortunate. Let's go look at their earnings. I haven't looked at them in a while. Let's see. So, dang. So the revenue is up 10% year over year. So the slowing revenue growth, used to be really high. So revenue's up 10%. Net income went negative. So they lost kind of their streak here. They were starting to look like they were going to make net income every quarter. Then they did that, unfortunately. So anyway, I don't know if this one deserves to be at $41, but they're a $4 billion company. Kill Bill, what's up, Jeff Mack? How's it going? Crypto about to be winter. What up, Save Man? What's up? What do you think of FuboTV? Hey, what up, Sparsh? Hope you're having a good day too. Let's see. Figma. Yeah, we can look at Figma too. FIG. So unfortunately, this one just IPO'd, so we don't have too much data. So yeah, they IPO'd at $30, rallied up to $130. Now they're at $90. They're up about 14% on the day. So let's actually see the revenue. So yeah, again, just because they just IPO'd, we only have this one quarter here, but the revenue's up 46% year over year, so that's good growth. And they're net income positive on that quarter, and they were net income positive last year, so it looks like a high margin business. They made 50 million in net income a quarter. You kind of annualize that, this company's making 200 million of net income a year, and well, $44 billion company. I just need more history. I can probably find that on their website, but what up, Viper? He said FuboTV. So my side of the bet is actually is Disney, because there's not too much more upside. Like, I don't think this stock could really go back to $6. Maybe like that's the upside, that it could double to $6. But I don't think it could go any higher than $6, because that's like the Disney valuation thing. The business didn't actually have good results. The revenue's up 3. They did narrow their losses. They only lost 25 million. So that's interesting. This inflush of cash was from Disney buying it. So yeah, my side of the bet is literally just Disney stock. I do own them, so I might be a little biased here. Yeah, I got 15 shares of Disney. So Amazon after hours, market's still open. We got 10 minutes till the market closed, and we have earnings from AppLovin, DoorDash. Wow, Amazon's up nearly 4% on the day after this huge crater, this huge gap down. So yeah, good news there. But I did buy a share yesterday, so feels good. Powell Industries also having a lovely recovery. This morning it was down 13%. We were down like 300 on them. Now they went from 208 to 228. So good news there. Ooh, Progressive. Yeah, let me look at them real quick. We can look at Fortiv as well. Remind me to look at Fortiv. So, all right. Let's see here. Yeah, if we go back to my Webull portfolio right here, one of my most recent purchases that I've kind of been talking about is ticker symbol PGR Progressive. And I was talking about this a bunch in yesterday's stream, but I bought just over 1.5 shares of this company yesterday. Oh yeah, there's the little buy order where I bought Progressive, but I want to show you why, in my opinion, Progressive is worth buying and holding for the long run. So if you're looking for a stock, not really to trade, but you just buy and hold forever, one you can just kind of trust, buy and forget about it, I think PGR might be worth checking out. Just put on your watch list or something. Again, none of this is financial advice, but let's go look at the valuation compared to the industry average. So the PE is a 14. The industry average is a 12. So they actually deserve a industry premium, I believe. They're an insurance company, if you've heard of Progressive before. So 81% of the businesses, they're personal lines. And look at this trend. I mean, if you're going to buy and hold one for the long run, you want to make sure it's growing at a good rate. And look at this. It grew 23% year over year to $20 billion just this quarter. So the growth was incredible on the personal lines. How about the commercial lines? Yeah, also at a record. So, I mean, that's a smaller business. But also, check this out. The best part also is the net income that they're doing. Oh, saying cumulative. I need to change that later. But anyway, they're the most profitable they've ever been. They're making a boatload of money. Already for the first half of 2025, they're at 5.7 billion. For the full year 2024, it was 8.5. So anyway, they had like 3 billion just this quarter. Really good numbers on Progressive. Let's see. PGR are my initials. Hey, that's funny. Are you bears for the market following? Oh, hey, hold on. Sorry, let me mute that guy. It's gonna rip today. What up, Hashim? So let's see. It's prime to boom. Hey, yeah, what up, Schlink? I really like PGR. All right, so yeah, we can look at Novo Nordisk as well. Sorry, FTNT. Yeah, let's look at Fortinet. I think this company reports earnings tomorrow or today, maybe. Let's go see. Wait, FTNT, right? It's the ticker symbol. So this is one of my favorite cybersecurity picks if I was going to pick one. Man, it does not want to load. FTNT. Oh, there we go. Fortinet. So check this out. This is a $96 stock. They're in the cybersecurity industry. And look at this. 40% of the revenue comes from their subscription. And I love subscription model companies. It's all reoccurring revenue. And look at this growth. I mean, up double digits, 16% year over year to a new record. Really good growth on that. So I love to see that. I want to pull up the annual subscription numbers here if it would, man. Sorry about my Wi-Fi. It's just terrible today. Oh, yeah. So look at this. Their subscription revenue literally just hits a new record every quarter. So that's kind of what you want to see. Let's go look at the net income too. Are they profitable? Yeah, dude, wow, they're making 4 billion plus a year. These growth rates are incredible. So let's see. Revenue's up 13%, but the net income. So revenue's up 13, net income's up 44. So what does that mean? It means they're growing their margins. So they have 30% plus net margins. That's pretty ridiculous. So anyway, I think that one deserves to be at all-time highs. I mean, they're in a good industry. Home builders by ETS. Copper indexes. There was some kind of tariff copper news. Oh yeah, SFIX. I wanted to look at that one too. So Stitch Fix. Haven't heard of this one before, but let's check it out. So look at this. A very small market cap, a $620 million market cap. So you do want to be careful with these smaller names. But let's go judge them off their financials. So let's see. Revenue. So we want to start with. So I do notice it kind of lost their growth. So it fell 15% year over year. So yeah, look at these huge declines in revenue. You know, it used to be, look at that, over 500 mil a quarter. It was 500 million plus a quarter. Now in the most recent quarter, you know, 320 mil. So they kind of lost the growth there, and they're still losing net income every quarter. But the trend is getting better. I mean, they're barely losing any net income now, but I can kind of understand why this one hasn't done too good. But I don't know what they do. What industry are they in? Let me go check actually. Of shoes. So apparel shoes. I've never heard of them before. Huh. Well, anyway, SFIX, Stitch Fix owns some shoes, I guess. So let's look at NVO right here, Novo Nordisk. So this is the company that owns Ozempic. It's that weight loss prescription, and they reported earnings today. And after, you know, I forget the reason why they gapped down. There was no earnings, or yeah, because earnings were this morning. So they gapped down for some reason, and they continued to bleed. Here they are now, down 4.2% on the day. Really unfortunate, but let's go see what the actual earnings were, because they just came out this morning. Let's go pull them up right here. So Novo Nordisk, if we look at the EPS right here, the kind of the orange line, sorry man, my thing is really laggy. I can't believe this, dude. I might have to disconnect and recast, man. This Apple Play is not working with me. But anyway, so they missed on net income. So analysts were expecting 95 cents of EPS, which is net income per share. They missed on that. They missed on EBITDA as well. Fernandi said, what app is this? Hey, yeah, this is a broker right here. If you want to get this little software I'm using, it's a brokerage. It's in a link tree in my bio, very first link there. It's also an affiliate link too, so it helped me out. If you go and deposit $100, we'll both get some free stocks. But anyway, we don't have their most recent quarter of earnings, but for right now, they're printing money. I mean, they're making nearly $4 billion of net income a quarter. And yeah, we can see that, look, 95% of the revenue, what does it come from? Well, it comes from their obesity care products. So they also have a crazy yield. Yeah, 3.5% dividend yield. Not too bad for NVO. But again, this is an industry that's kind of being like highly regulated right now. So in 10 minutes, we get earnings from DoorDash and AppLovin. So that'll be fun to watch. I told you about GTLS. What is GTLS? GTLS stock. Let's go check it out. And we can look at some of these other ones. LUNR. Yo, I'd be careful with. Oh, yeah, Chart Industries. Yeah, this was from 5 days ago. This company got bought out by a company. So, yeah, nice. Someone said, oh, yeah, PayPal. My bad. I never got to PayPal. So, this is a huge buyback company. This will actually really impress you. I think this is the one thing I do like about PayPal. So first off, they trade it like this commodity multiple of 14. That's the lowest PE they've like ever traded at. So really low PE. We can see their total payment volume. It's 440 billion. But this is the best part. Well, here's also the bad news. The bad news is the slowing growth. I mean, the revenue's going single digits. It grew 5% year over year, grew 1% year over year. So we want to see the growth like be at a higher rate. And here's the net income though. So they're pretty much making just over $1 billion of net income a quarter. And they're pretty much spending all this on buybacks. So remember this, the net income grew 11% year over year, but your return as a shareholder through EPS is up 19% year over year. So they literally have bought back 8% of all the shares that exist just in the past year. So this is the crazy part. The fact that your return, it's because the S part of the ratio, earnings per share, the S part went down. There's less shares that exist. Anyway, I think you kind of get the point there. All right, let's see here. Yeah, PayPal is cool. Let's see. Qubits, Palantir hitting 180. Yeah, we can look at Palantir too. The market closes in 1 minute. What is this company? BE stock. Oh, Bloom Energy. I haven't looked at this stock in a long time. I remember they got some like huge contract, like saving them. Yeah, so they're actually a decent market cap. This is a $9 billion company. So $9.1 billion company. Let's go see their financials and what do the analysts expect here. So yeah, these year-over-year growth rates are really good. They made 100 million in net income that quarter, and that was real too. So yeah, they barely lost any money the most recent quarter. Revenues growing 20%, deleveraging like crazy. So yeah, it went from 82 to 75. That's interesting, Bloom Energy. Let me see what the analysts have to say about that. We can kind of see the analyst rating. Oh, what is it? TR from OpenAI, BOFA. What do the individual analysts have to say? Flicka has this at anyway. BE, I'd be careful with that one, but let's go see. I probably give PayPal a ton of earnings and fees. Yo, me too, dude. TikTok, the only way you can get paid through TikTok in the United States is if you have a PayPal account. So that's pretty interesting. Jay said, what app is this? Yeah, hey, this is actually a brokerage that I'm on. If you want to get it, it's in Linktree in my bio, that very first link there. It's an affiliate link too, but it'll help me out. I like to keep my idle cash in here because it earns you the nice little interest. So my little $300 of cash, better than nothing, earned me 4 cents of interest today. Not too bad. So yeah, market just closed. It just turned 4 o'clock. Market just closed. And I'll show you. We'll go to the earnings hub real quick. I'm going to show you what reports earnings. I know by memory that DoorDash and AppLovin report. So let's see. These are all, a lot of these I've already reported. Shopify, Uber, McDonald's, Disney, Invio, all reported. Oh, Duolingo. Yo, Duolingo, TKO stock. So this is a really interesting company. TKO, if you don't know, this is the company that owns the WWE and the UFC. So if you're into that, hey, maybe check out their stock. So they report earnings. Royal Gold, post market. Yo, this is my favorite royalty company. I didn't know they reported today. This is really cool. So check this out. If you're looking for like a royalty company, here's Royal Gold. Look at this. Their royalty streams right here, all high margin, are up like crazy, up 53% year over year, mainly just because the price of gold is so high right now. But anyway, it's kind of like you get exposure to gold with a little bit of a dividend yield there. Griffin reports earnings today. Or they already did this morning. Yeah, that was pre-market. Kodiak Gas Services. That's a cool company, even though they're full. Anyway, so guess we'll see what happens. And then tomorrow will be fun as well. If y'all want to hit the follow button, we'll be live tomorrow. We get a Constellation Energy. This is my second largest holding. This is the main U.S. nuclear reactor play. They own like 50% of the U.S. nuclear reactors. Motorola Solutions. They have so many government contracts. Security company. And Dave. Yeah, hey, Dave crushed my portfolio today. So anyway, yeah, that's what reports earnings today. And Planet Fitness, did they already report? Planet Fitness is down 3%. So anyway, yep. In a couple minutes, in literally 3 minutes, we'll get Duolingo. Duolingo's up 10%. Hold on. Check this out. Let me actually go to the 1 day here. Look at that huge green candle. So kind of see up here, Duolingo's at $384 a share. This is what I've been telling people. I love Duolingo for one reason, and it's because they're super growthy, super profitable as well. So kind of go to their earnings right here. 83% of the Duolingo's revenue, and this is like that language learning app, comes from their subscription business. And look at this subscription revenue growth. I mean, it literally just hits a new record every quarter, grows 50% every quarter. So subscription revenues up like crazy, and the advertising growth is growing, 38% year-over-year growth in the advertising revenue. So, and not just that, they're making a lot of profits. 35 million in net income. And FCF stands for free cash flow, 103 million of free cash flow. So Duolingo is a really cool company. So anyway, they're up 14% after hours. Let's see, is AppLovin out? Probably not. So yeah, we're still waiting on AppLovin. Looks like they're up 1%. Not. And Airbnb, I forgot to mention, Airbnb reports earnings. When should I get out of Uber? Hey, I would probably just hold Uber forever. You want to say what app is? Or yeah, well, hey, this is actually a broker right here. If you want to get this little software I'm on, it's in the link tree in my bio, the first link there. It's a free app, lowest fee broker in my opinion, and it's also an affiliate link. So if you sign up and deposit $100, we'll both get some free stocks. Anyway, let's see here. So Duolingo, wow, up 20% now. That is crazy. So they were up, or they were at 345. Now they're at 410. So crazy gain on them. Let's see, is TKO out? TKO, which is WWE and the UFC, not out yet. And AppLovin, we're still waiting on that one. So I think they're reporting 1 minute. So we get all these earnings in 1 minute from now. So just wait 1 more minute with me. And some of these other companies report some lesser known ones. Oh, CPRX, no way. CPRX reports today. Hey, I own that stock. Here, let me show you that real quick. We'll come back to it. But anyway. Yeah, so these are all the stocks that report today. Yeah, hey, so people keep asking in chat. So, hey, the track, I'll pin this. If you want to get this software, this app I'm on, it's in the link tree in my bio. First link there. It's a brokerage called Moomoo. It's an affiliate link too, so it helped me out. But anyway, let's check out AppLovin again. Flat, yep. It's still 404. The numbers come out at 405. So in less than a minute, we get earnings from AppLovin, Airbnb, Curtis Wright. Has anyone heard of Curtis Wright? This might be an aerospace and defense company. I don't know. I'm pretty sure. I can just go check if my Wi-Fi will work. Let's see. Where does the revenue come from? Oh, yeah, naval and power, defense and electronics. So we have this aerospace. Aerospace is 30% of revenue. So yeah, actually, Curtis Wright, what's their market cap? 20 bill. That'll be interesting to watch too. So let's see. Sold off my SMCI during after hours. Yo, what up, Jeff Mack? Dude, I wish I did that too because they're down 20%, but I'm just going to hold them for the long run. Yeah, Duolingo's up 21%. That looks like it's going to be the big winner. I'm watching this Royal Gold as well as a gold play. I love them. Hopefully, they'll have a little dip in stock price so I can maybe buy the dip on them. Is AppLovin out? Uh-oh. AppLovin's down 8% right now. They were at 393. Now it's at 360. So there's one thing I really love about AppLovin. It's this advertising revenue growth. I mean, obviously we don't have the numbers that just came out this minute, but this has been the huge revenue growth driver. Advertising revenue is up 71%, over $1 billion. I mean, if we zoom out, this used to be just 200 million. So incredible growth there, and not just growth of the sales, but also profits, like the free cash flow, 830 million this quarter. Net income, 580 million of net income, ridiculous. 40% plus basically net margins on this company. But yikes, they're down 13%. So I guess we'll kind of wait and see what the earnings were there. Let's go check out Airbnb. So we had Uber this morning. Uber, they don't own any cars, but they make money every time someone books it. Airbnb doesn't own any houses, but they collect a fee every time you book one through their platform. So I guess we'll kind of see how they move. I think they actually might report at 410, so we might have to wait 5 more minutes for Airbnb, which is fine with me. Maybe they're out and the stock's just not moving. I don't know. But AppLovin's for sure out. They're down 13%. Looks like the main winner. Let's see these other ones that report post-market. Is Curtis Wright out? Nope. Or maybe it is, but no volume. Yeah, Duolingo up 23. Pretty ridiculous. And then right after this, we'll spend not too much longer on this. Then we'll go look at your guys' stocks in the chat here. And then we'll come back and forth and see how these earnings are doing on these companies. ACMR Research, they're down 15% on the day. They came out this morning. Oh, CPRX. This is a company I own. So actually here, I'll go ahead and show you that. I'll go ahead and show you my position in this stock. I love being fully transparent. Look at this. Here's why you don't play around on earnings. Look at this. This was today. Down 18% on Dave, 6% on AMD, 18% on Supermicro. So we lost a lot of dollar hollers. But anyway, CPRX reports any minute now. So I guess we'll kind of wait and see what their numbers are. CPRI came out as well. Hey, we'll check that one out as well. That's interesting. So, DCTH, yeah, they reported this morning. So yeah, let's see what happens. What is Super Group? I don't know. That's probably a small cap. Is Airbnb out? Airbnb, it looks like the numbers are probably out because they're starting to pump up 2.24%. Must be out. For the last time, and then we'll go look at some stocks. Yo, what up, Gabe? What's up? This one's down 12, and Duolingo up 25% now. Pretty crazy. Again, come to tomorrow's stream. We'll be streaming, looking at CEG, Monster, all these other companies' earnings. Here's how my portfolio did on the day. We're up 0.47%, not too bad. Amazon was a huge winner today. Amazon, wow, was up exactly 4%. That's a nice little boost on Amazon price today. Let's go. And also, Amazon, someone just said in the chat, IONQ, Amazon took a big stake into IONQ. What up, Richard? Hey, sorry. Let's get back to the chat here. Yo, what up, Thermo, Richard, Mike? How's it going? Hope you're having a good Wednesday. Yeah, let's look at NNE. This is nanonuclear. This is actually I believe, a nuclear startup. So I don't know if they have any revenue, but let's just go double check. So if I go to revenue right here, so yeah, the reason it says no data is because they're a startup. They've never sold anything, not a product or a service, so there is no revenue, and the net income is negative 21 mil. So I would still like, if out of all the nuclear companies, I would be careful with this one just because they have no revenue. Like, great balance sheet, like pretty much no chance of bankruptcy, but I want to buy a company where I can see some revenue. Yeah, hey, Duolingo, Duolingo just went crazy. Let's see. Someone said, or Gabe said CPRI. Let's see. Capri Holdings. I do own this one. So they're up. Up 14% on the day. Nice. Very nice. HNST reports. Oh, we can look at Honest. Yeah. Let's check it out. So I bought Shopify yesterday. What do you think? Hey, that was a great move, Mike. I think they're up 20% today, right? Yeah. Shopify's up 22%. This is a Cathie Wood stock, and I'll show you why I just love them. You know what? Let me pull up the Cathie Wood portfolio real quick. You know, Cathie Wood, she runs the ARKK ETF, and here's her portfolio. Her top holding is obviously Tesla, Roblox, and then 4.4% of her portfolio is in Shopify, and she owns Palantir. Palantir's been crushing it. But here's what I love about Shopify. Obviously, we don't have their most recent report because it just came out, but this is incredible annual growth. I mean, this is just a pure growth stock right here that I'd be comfortable buying and holding for the long run. For the full year 2024, they had $9 billion of revenue. You know, compare that to 20. It just hits a new record every quarter, every year. So great news for Shopify. They're really profitable too. Like, if you go to the FCF, free cash flow, making a couple $100 million of free cash flow a quarter, operating profits just as good. So anyway, I bet they continue to win. But thoughts on Disney after earnings and the price drop? Yeah, I actually have not looked at Disney yet. Let me look at HNST. What up, Ryan? HNST. Let's see. Honest stock. So this company just sells diapers and wipes. They kind of just sell a commodity. Let's see. Honest company beat that comment said. We don't have their financials because they just came out, but this one I know has no debt at all. So this is a $500 million company. They have no debt at all, and they're just now getting net income positive, and they have $72 million of cash on hand. So that kind of takes a lot of risk off the table. They have no debt, $72 million of cash, pretty good. All right, let's see. Disney stock. Yeah, I wanted to look at that one. So I do own Disney, by the way. You know what? I'll show you my position in this company. Why not? And CPRX reports earnings today. I wonder when they'll come out. But yeah, here's my Disney position. I have 15 shares left of Disney. And they're down 2.66% on the day. Let me go look at their earnings. I remember they had a nice beat on net income. Let's see. Yeah, look at this, dude. I think there was a little one-time adjustment because of the Hulu. They acquired the rest of the stake in Hulu, and it had a tax adjustment. But this net income beat is crazy because they actually slightly missed on revenue. I think that might be why the stock is falling, because of that revenue miss. The numbers aren't down here yet, but I think the revenue, they probably wanted more growth. They showed some good guidance. They had really good guidance. They're expected to deleverage. S&P 500 kept their good credit rating on them. You get a 0.9% yield on this company. Basically, I love them for their streaming services business. It's the most profitable it's ever been. It's going to continue to make more profits. Also, the cruise line is going to make them at least $100 million a quarter of net income. I guess we'll see, or maybe. Not financial advice. We'll see what happens there. But the cruise lines, I don't love the cruise industry, to be honest with you. But if we go to a Royal Caribbean right here, Royal Caribbean is surprisingly profitable. And what up, Kevin? How's it going? So look at Royal Caribbean. Has anyone heard of their cruises before? This company is surprisingly profitable. So this is Royal Caribbean, just a bunch of cruises they own. They literally made $1.2 billion of net income this quarter. $700 million last quarter. They're extremely profitable, and all they do is cruises. So I'm curious to see if Disney Cruise Line can maybe take some of that money. So let's see. Ryan said TPL and LB. Yeah, those are two very similar companies. I know they both own a bunch of like oil wells where they get royalty, and they're both in Texas. They own a bunch of land in Texas. So I believe this one, the reason they rallied up so much right here, they got added into like the S&P 400 mid cap ETF, or maybe the S&P 500. I don't remember, but let's see. Land and resource management. Yeah, look at that. I think this is one of the royalty streams. Water and service operations. Yeah, so that's where the revenue comes from. They sometimes do special dividends as well. And yeah, look at that. They're making over $100 million in net income every quarter. Insanely good balance sheet. Man, look at that fortress of a balance sheet on TPO. So they're very interesting. You know what? Let me put them back on my watch list. I've never looked at them on this app before. Would you put money into Berkshire Hathaway? Okay, yeah. Berkshire Hathaway. Yeah. So Berkshire Hathaway, I do love this one. This is like an S&P 500 alternative. It historically has outperformed the S&P 500 every year. I love the businesses. Like they own Pilot, like those gas stations. They own a huge insurance business called Geico. You probably heard of Geico before. They're just such a diversified company. So they own a lot of different brands and companies. Like they own Dairy Queen. And unfortunately, I think the reason the stock has fallen because of its net income number. But I mean, and Warren Buffett did step down not too long ago, but like last month or two. But that one might be worth. That one's one though. I bet will be a winner in the long run. Yeah, no problem, Mike. Don't buy the TKO. Oh yeah, let's go back to earnings real quick. So let me go back to the earnings hub. We had let's go look at how Airbnb and all these companies are doing. Let me search my watch list again. So yeah, we already had Disney, McDonald's, Uber. Let's go look at AppLovin. Are they still down? Yeah, so look at that. AppLovin is down 13% right now. Not great. Yeah, that is not good. Let me look at Airbnb next. Airbnb slightly green. Airbnb's up 0.01. I guess that is barely green. Oh, TPL reports earnings. So we'll see what TPL does. I didn't even realize that. We just added them to the watch list, so that's why I showed up there. Curtis Wright, the aerospace and defense company, down 2%. And Duolingo, let's see Duolingo still holding on to that crazy gain. Duolingo's up 23%. Earnings are real market movers for these individual stocks. And TKO Group, which owns WWE, check this out, they own UFC and the WWE. So unique stock right there. And Royal Gold, have they moved yet? Nope, no movement on them. So yeah, that's pretty much all the popular ones. I don't want to waste your time. Oh, is CPRX out yet? I do own this company. Looks like they're not moving after hours. Oh well. What do you think of NVO, Novo Nordisk earnings? I think they slightly missed. So on the analyst expectations, but still the valuation is dog cheap. It's kind of priced that in. Have you checked out DataDog? Yeah, the company just got added into the S&P. Oh wait, Alicanus said TTWO stock. Yo, I really like TTWO. This is the company that owns Rockstar Games. And so if you've heard of GTA 5, Red Dead Redemption, they own both of those games, and they own GTA 6. So basically they have this asset, GTA 6, that whenever they release it, it's going to make them billions. They're in a unique position where as soon as they release it, it's going to bring them in billions of revenue. They'll sell skins, DLCs, map packs, whatever they want really. So yeah, that's the huge kind of future growth driver of the company there. GTA 6, supposed to be one of the biggest games of literally all time. So DDOG as well. This is a cybersecurity company that just got added into the S&P 500, and then they sold off all that rally. So the only reason they gapped up right here, there was no earnings or anything. It was just S&P 500 inclusion. But now they've kind of sold it all off, which is kind of weird. Their revenue is really growthy. Actually, I think I can view it up here. So yeah, look at this. We don't have too much data because they IPO'd not that long ago, but we're from 1.68 to 2.13 to 2.7. So it's seen, growing 30% a year. Pretty good. The free cash flow is really good. Couple $100 million of free cash flow. Net income did just fall a little bit, so maybe that's why investors aren't too happy, but still profitable every quarter. CEG tomorrow, you're right. I can't wait. Which was that stock before Disney? I forget. It must have been the Honest Company. By the way, if you missed anything on the stream, by the way, the best way to support me, go watch the stream from YouTube. And if you miss anything, you can replay it on the YouTube stream. My YouTube channel is called Nathan Robert. You can just type into YouTube Nathan Robert, and it's in the link tree in my bio. So if you go to the link tree there, like the third link there, the fourth one is my YouTube channel. If you don't want to type it in. But anyway, yeah, I appreciate if you just watch the stream from there. I sell nothing. I have no course, book, Discord. I sell nothing. I'm just trying to give my opinion. Watch out for people impersonating me. You might get followed by someone impersonating me. I'll never DM you. So the metals company, Deep Sea Critical Mining Company. So yeah, this is a startup right here. This is the metals company. Basically, they want to send these robots into the ocean to like suck the minerals out, like the nickel, the zinc out of the ocean water. But this is the thing. This is still a revenue-less company. They're a startup. So if you go to the revenue right here, it says no data because they've never sold anything because they're a revenue-less company. And they're losing 20 mil a quarter, not the end of the world, but this isn't good. Look at this time last year. They had more assets than they had liabilities. Now they have more liabilities than they have assets. So I am being careful with this one. I would finally like to see them start to make some kind of money. Sea Candies, that is the only insurance policy I need. I'm not bragging, but I own, of my APS. What stock are you talking about there? My APS is, that's not what, let me know the ticker symbol you're talking about there, Luca. I don't think, of Duolingo, man. Oh my goodness, I'm just blind. Or wait, Howard Stern XM merger. Yeah, give me the ticker symbol for that one, Mike. And I'm reading two different comments here. I'm sorry. Yeah, Luca, Duolingo, DUOL, they're up like 20% after hours. We don't have their numbers yet because they literally just reported earnings. So I guess we can go to the news tab and see what it was. Let's see. EPS beat, daily active users are 47.7 million. That's the daily active users. So 50 million people are on Duolingo a day. That's actually crazy. Guess that streak is motivating people to come back. Oh, Siri stock. Okay, so actually Warren Buffett just bought this company. So Warren Buffett does have a little stake in this stock right here. So let's check this out right here. So SiriusXM right here. Let me go to shareholders real quick. So yeah, look at this. Berkshire Hathaway, which is Warren Buffett's company, is the largest shareholder of SiriusXM. But this is kind of a dying business because if you go to the SiriusXM, I think this is like a radio business. I mean, you can kind of just see this. It's not growing. It's actually declining every quarter. So the business is slowly shrinking. This is basically a dividend play at this point. If we go to the dividend, it's of a 5.13% dividend. The payout ratio says negative because they had this little one-time adjustment. Huge one-time adjustment, a $3 billion loss. I don't know the story behind that one, but I'd love to read it. But yeah, dang, this still fell 40% year. They only made 200 mil of net income. So yeah, kind of just, I don't know if this one's really going to outperform in the long run. It's kind of a value dividend play at this point. The dividend's probably safe. All right, let's see. ACHR is still kind of speculative. Yeah, ACHR is another revenue-less company. Here's the thing, like there's so many stocks to buy out there. This is one I just stay away from it. It's probably great. It probably is, but here's why I just stay away from it. So look, you're paying $6.3 billion valuation. So the whole company is worth $6.3 billion. Let me go show you a little bit about their financials. So we go to the revenue right here. It says no data, again, because this company has never sold anything. So they have no sales, and they're losing a lot of dollar dollars. For the full year 2024, the entire year, they lost 500 million. And so far in the first quarter, they've already lost 100 million. So it's a company that loses over 100 million a quarter with no sales. I would just be careful with that one. I know some like big investors, and it's backed by some good people, and they have contracts, but I'm just be careful with that one. So here's a cool one, PANW, Palo Alto Network. So let's check this one out. So AMD as well. Yeah, AMD. Do you think I should sell Duolingo or keep it? Yo, Miller's, again, not financial advisor. I think that one might be worth like a small trim, but I definitely wouldn't fully sell out of that position. Maybe a trim. But here's Nancy Pelosi's portfolio. She does own that stock right here, PANW. This is probably my favorite cybersecurity pick out there. Maybe CrowdStrike as well. But Palo Alto Networks, one of my favorites because, again, 54% of the revenue comes from this subscription business, and it just hits a new record every quarter. I mean, these are really good year-over-year growth rates. Just hits a new record every quarter. So the subscription revenue is doing great. They're making a bunch of free cash flow, $500 million a quarter plus. That income's 300 mil, couple hundred mil a quarter. So anyway, cybersecurity is an industry that we're always kind of going to need. All right. Oh yeah, let's look at NVO, and then let me actually, we can pull up AppLovin real quick. How's AppLovin doing? Oh, look at that recovery. AppLovin, when we watched it, they were down to 340. Now they're back to 380. So there must have been some good news. What about what's their ticker symbol? Airbnb. Is it ABNB? Okay, cool. So Airbnb's down 1%. Okay, so not really moving there. All right. Let's go back to here. NVO. So Novo Nordisk reported earnings this morning. This is the this man stole my name. Wait, Spread the Wealth. Is that not you? Spread the Wealth. Are you kidding me? That's not you? I thought that was you, dude. Okay, anyway, here's Novo Nordisk. This is why this one might be decent. It might be worth looking into. They have a 3.5% dividend. So a really nice dividend yield. The PE is dog cheap. And this is updated. Look, the PE just gapped down to an 11 versus the industry average of a 22. One reason why the PE is being so heavily suppressed right now is because their patent of Ozempic expires in 2027. So yeah, this is the company that owns Wegovy and Ozempic. And look at this, 95% of the revenue is from their obesity care products. So that's really interesting. And look at this net income. I mean, they're making a crazy amount of net income, $4.2 billion this quarter. But here's the reason, I guess, why they fell. Like, they met revenue, slight miss on net income, and a little miss on EBIT, like 5%. So I don't think they deserve to be doing this bad. I mean, it's a risky industry, though. Hold AMD, it's still up 100% year to date. Hey, you know what? I do hold my AMD. Check this out. By the way, here, I love being fully transparent, by the way. Look at my huge losses today from Dave, AMD, Supermicro. Those are my big losers today. And Reddit did really good today. Reddit's up 7%. We're at like an all-time high on them. Progressive Corp has also had a really good day. I've been kind of talking about that one recently. I love Palantir. Thoughts on Powell and AMD? Yeah, you know what? Let me look at AMD because we're here. And also Powell Industries, someone asked. I'm surprised Powell Industries is only down 3% because this morning when the market opened, this was at $209 and now it's at $220 or $228. So really nice growth there. Yeah, Ryan Mills, that's crazy, Ryan. Would you consider Disney a buy right now? Yo, Equinox, I don't know about right now. Because I do own Disney and I'm up 35%. Probably like if Disney falls 5 to 10% more, it'd be worth starting a position into. But again, Disney's kind of boring. They're not really going to outperform in the long run. Probably not going to beat the QQ. And yo, no way, Jessica. I didn't even see that. Thank you so much, Jessica, for the 12 roses. I really, really appreciate that. If you got a stock you want me to look at, let me know. Might go look at Apple or Meta as well. I do love those picks. Everyone knows about those companies. Supermicro, what do you think? Yeah, hey, Matthias, Supermicro lost us a good amount today. We're down 18% on them. Luckily, we bought in Supermicro Computer at a very good time. This was a long time ago during the accounting fraud shenanigans. So anyway. All right, let's see. They just made a deal with WWE for 5 years. Yeah, you're right. Disney and the WWE did just have a partnership. It was worth like 1.6 billion. I made my first $600K off Zoom. Dude, Zoom, I'm down bad on that stock right there. Where's Zoom? Bro, look at that. We are down 52% on Zoom, 50% on UiPath. And hey, CPRX reports earnings today. I think it reports earnings in 3 minutes. Oh, no, but it already came out. So they beat by actually a pretty good amount. You know what? We'll just see how they react tomorrow. So another company that reported earnings today was McDonald's. Yeah, let me show you my main account. I haven't pulled up this account. How did we close? Barely green, up 0.04. But hey, a green day is a green day. So this company tomorrow reports earnings, CEG. This is actually my largest holding in this portfolio. So for the load here, I got I have $5,000 in this stock. 2,000 of that is gains. So this has been one of my best performers. So I guess we'll see how they do tomorrow. Yeah, don't touch UiPath. That one is not good. They lost their growth. The CEO quit, bailed on the team. Cash grabbed us. But hey, Reddit, dude, Reddit, no way. We're up 120 on them. Dude, Reddit continues to win. But then we have these losers. So yeah, always be careful on earnings. You'll never know what could happen. So let's see here. I left SMCI last week. Yeah, that was a great time. Let me look at Apple real quick because I saw that one, AAPO, and we all know this company. So I'm on an Apple device right now. They had an oddly green day. Look at that. You're right. Why was Apple so green? Up 5%. We can kind of, I guess, read the news article right here. Apple jumps 6% on word of $100 billion US investment plan. I guess that makes the valuation go up by 5%. Let's go. So let's actually go analyze them. I think this is a perfect stock to just buy and hold forever. No real reason to sell out of them. I mean, it's Apple, just hold them. We can see their smartphone market share. Obviously, we know 20% smartphone market share, and literally half the revenue comes from their iPhone. They make a great phone, and then they actually make a bunch of revenue from services. So if you go spend $100 in the App Store on like Clash of Clans gems, $30 of that goes back to Apple as a high margin royalty. So this services business has seen some incredible growth, and it's all like super high margin for them. For the full year 2024, it was nearly $100 billion of revenue. So the services revenue on Apple has blown up. Then they have the Mac revenue, the wearables, the iPad, obviously. And then here's why Apple is also affected by tariffs a bit. Only 36% of their total revenue comes from the US. So yeah, they're based in the US, but 25% of their entire business comes from EU, and then 17% China. So I love how internationally diversified that they are. And Apple also has the biggest buyback program of any publicly traded stock. So I'll show you how meaningful this is. So they're making $20 billion nearly of net income every quarter. But you're wondering, what is Apple doing with $20 billion in net income every quarter? Well, we just go to the cash flow statement and we can see the share buyback. So yeah, check this out. This is the best part. Apple literally spent $21 billion just this quarter buying back their own stock, or they spend nearly $25 billion every quarter just buying back their own stock. So that's how Apple can afford to, invest $100 billion in the US. I mean, they already spend $100 billion a year buying back their own stock. Also, their very small dividend only cost $4 billion a quarter. They have so much room to raise their dividend. So here's the power of the buybacks, by the way. If you go to the net income, it's up 9% year over year. So the net income's up 9, but your return as a shareholder, the EPS, which is the net income per share, is up 12% because there's 3% less shares that exist. It's up 12% versus net income being up 9. Anyway, I think you kind of get the point there. Cool company to buy and hold forever, in my opinion. Let's see. Symbiotic also reported earnings today. Really? Symbiotic, that's the robotics company. Whoa. They're down 8% after hours. So already they've had this incredible rally. So a little 8% drop isn't the end of the world for them. I want to pull them up on the one day chart. So yeah, look at that. Oh, they've actually recovered a little bit. So they went down to 51. Now they're at 57. So this is like my second favorite robotics pick. So if you're looking for a warehouse robotics company, Symbiotic is in that industry, and their main customer is actually Walmart. And Walmart likes them so much that they decided to buy a 14% stake in the shares. So 14% of all the company is owned by Walmart, first of all. So that's kind of really cool. They're super close to net income positivity. They lost 60% less money than the previous year. The revenue growth is nuts, up 40% year over year. That's the kind of growth you want to see, really good growth. They have real IP, real patents, unlike like Rich Tech Robotics, some of these other extremely small robotics companies I just stay away from. I would just pick Symbiotic or even Amazon. Even though Amazon isn't a pure robotics play, they'll still win from that. With the Rivian, they own a huge chunk of Rivian. Anyway. Yo, what up? Sabin said AMPX. What's this one? AMPX. Amprius Technologies. So or pretty small company. They're only worth $900 million. So do beware that this is a micro cap, $900 million company. Looks like they sell batteries or something. Um, Only 34% of the revenue comes from the US. Are they profitable? So I like this growth, first of all. The revenue went from 2 million to 11, so that's good. It's easy to grow small numbers, but they're heading in the right direction. Pretty decent balance sheet. Decent balance sheet. Cash flows negative still. What about this net income? They're losing 10 million in net income a quarter. So if they're losing 40, I'd still just be careful with this one. The good news is the revenue growth there, but we want to see them narrow those losses. What do you think of tomorrow's tariff? Oh yeah, isn't tomorrow like the tariff deadline? Or um, Disney, ESPN bought rights to the NFL Red Zone. Yeah, Jack. ESPN or Disney owned ESPN gave 10% ownership of ESPN to the NFL, and they gave them $1.6 billion in exchange for those rights. That's pretty cool. Let's go Disney. I do own Disney, by the way, so hey, that helps me out. Oh yeah, SoFi Technology. Hey, let's see. What up, Ryan? So let's check out SoFi as well. This is my favorite fintech right here. I do own them, so I might be biased, but check this out right here. SoFi Technologies, they're a fintech, so we look at their financial services revenue, which is 40% of the business. This has seen monster growth. I mean, it literally is 300 million just in the past 3 months. So it's 100 million of revenue a month, up 101%. So this growth rate's really the winner here. So this growth rate, what's it going to be this time next year? Also, the lending revenue with the student loan forgiveness, cancellation and stuff, this is up 25% year over year. People are really starting to take them serious as well. They're a super profitable company. They made 100 million just this quarter. So again, I do own that one, but I think those growing, the crazy growth, the good net income, it justifies the stock price appreciation and allows them to kind of have a good or a high PE. Airbnb beat on revenue and earnings and guidance and still slightly down. Dang, Richard, let's pull up Airbnb again. So, yeah, they're down 1.2%. Hey, what is this? This thing is telling me that there is a double top. Wait, what is this? Or, well, actually, I don't want to load here, but anyway. Airbnb, yep, down one. Is that really not going to load? All right, oh well. Anyway, they're down 1.6%. And it was really AppLovin that had a huge move, ticker symbol APP. Let me pull that one up real quick. Actually, AppLovin is barely down at all. AppLovin, oh wait, no, it just updated. They're down 8% right now. So yeah, RIP AppLovin. I love this advertising company. Advertising is 80% of the business, and it's just seen, again, monster growth, and it's really helped out the net income. I mean, they made 580 million in net income just this quarter. So really good profits on AppLovin. IONQ after hours. Are they moving after hours? Down 0.49. I wonder what happened there. MSTR. Yo, what up? Ryan said MSTR. So this is actually MicroStrategy. They just basically buy a bunch of Bitcoin. Oh, they just bought more Bitcoin. Let's see. Commissioner purchased 21,000 Bitcoin for 2.5 billion at 117,000 each from July 28th to August 3rd. So they just did this. They just bought another 2.5 billion worth of Bitcoin. So they basically just issue shares, raise cash, and buy Bitcoin with it. So what you really want to look at for this company is the balance sheet. What all these assets are is their Bitcoin. So that's how it went from 7 billion to 65 billion. That's from all the Bitcoin that they own. And Bitcoin just done really good the past 1 year. It's like, I think doubled or something. So yeah. Let's see. Oh, what up? Slink said CHWY. Yo, you still in here? Let me see. CHWY. Nothing really impressed me with this company. I mean, they're not really growing that much. Like, actually, let me go look at them because I haven't looked at them in a while. So let's go analyze them again. Yeah, we'll look at CEG. What up, Babini? CEG reports tomorrow morning. I do own them. So if we go to the revenue, so actually, it is pretty all right. I mean, single digit, but revenue's up 8% year over year. They made net income on this too, so that is good news. Actually, you really want to look at the operating profit. It was up 20% from the previous year, so that's good news. They did leverage up their balance sheet a little bit. I mean, yeah, They need to keep this trend up of the operating profit and the net income. So, yeah, I don't know. Yeah, that's like a pet food related stock. All right, let's see. CEG. Yeah, let's just look at them right then. So CEG. This is Constellation Energy. This company owns the most amount of nuclear reactors out of any other publicly traded stock. So this is a pure play for nuclear energy. And I do own this one, by the way, so I might be a little biased. They're actually my largest holding here in my dividend growth Robinhood portfolio. If I pull it up here. And sorry, dude. Hey, if y'all wanted the follow button, by the way, I'd appreciate that. We go live every day. My Wi-Fi is not great today for some reason. But yeah, CEG, we got 5,000 in that company in our Robinhood account. Hey, we got Meta, Google as well. They did pretty good today as well. And McDonald's reported earnings this morning. They showed nice growth from that Minecraft movie stuff collaboration. So anyway, CEG, we're watching earnings for them tomorrow morning. So come back to tomorrow's stream to see how we do with them. We're either going to make or lose a lot with that one. So also, Powell Industries reported earnings this morning. I'm pretty shocked because it opened at 211 and now it's at 230. So they were down 13%. We gave a lot of that back, which is great. So someone said XYZ stock. This is actually a pretty cool company. Or wait, XYZ. It's a cool ticker symbol. It's XYZ. But this is the company that owns Cash App, I believe. So check this out. Yeah, the parent, they're called Block. So the company is called Block, but check this out. If we go to where the revenue comes from, check this out. 67% of the revenue comes from Cash App. And then they have Square, which I think is like a website developer kind of thing. But anyway, let's see how the Cash App business is doing. Looks like Cash App fell by 7% year over year. Not great. What about net income? So, hey, look at that. I mean, they had a little one-time adjustment last quarter. So we can go to the operating profit, but they're making a couple $100 million in net income every quarter. So yeah, they are really profitable. I believe they also just got added into the S&P 500. I believe. So yeah, anyway, they kind of look like PayPal stock. You know, PayPal owns Venmo. The two kind of trade similar. They both have like this huge gap up in 2021 and they're both nowhere near it. But yeah. I believe they're in the S&P. Do you recommend a HYSA or something? I have a Roth IRA. I think that's a Canadian thing. Call forever McDonald's, pay a dividend. Yeah, McDonald's is like one of the safest investments out there. You can just buy and hold that for the long run. Landbridge is a TPL in the making. Yeah, hey Ryan, the only thing about Landbridge, and I've actually analyzed them, is just the valuation is way higher, like way, way, way higher than what TPL is. So unfortunate. You know what? Let me go to earnings real quick. So yeah, here was today, by the way. We lost 18% on Supermicro, 17% on Dave, 6% on AMD. But so this is gonna look weird. So bear with me here for 1 second. The screen is gonna change. Oh, Dutch Bros is up 13. Hold on. Let's see what's down. All right, let me pull that up. So oh, Lyft is down bad. So let me look at Dutch Bros and Lyft. So BROS stock. Let me go back to this app right here. Should I buy Coke or McDonald's for my Roth? Yo, I own both of those. The answer is both. They're both great. But I don't know. McDonald's is probably safer. But because McDonald's is really a real estate royalty company. But check this out, Dutch Bros. This is like a Starbucks competitor. It's up 14% after hours. So great news for Dutch Bros. McDonald's also reported today. McDonald's is up 3%. So great little performance from them. And yeah, here's their company operated shops. That's 92% of the revenue. It grew 31% year over year. You know, for a restaurant in this environment, that's really good. And also, if we go to the net income, they're making quite a bit of net income and it's growing as well. And, you know, a couple mil of net income every quarter. So I will look into what their earnings are later. But someone said Coca-Cola stock. You know what? I own the bottling company, ticker symbol COKE. But you know what? Let me go to Warren Buffett's portfolio right here. So as you know, these super investors got to make their portfolios public. So here's Warren Buffett's portfolio. Literally 10% of his portfolio is in Coca-Cola. You know, he has all these other holdings as well, but literally just 10% of all his holdings are in Coca-Cola. Oh, and check this out. This little software is telling me that there's a bearish flag. Anyway, Coca-Cola is a nice dividend play. You get a near 3% yield with this stock. So 3% of your money is returned in cash a year. The PE is a 24, so that they have room to raise their dividend. Let's see the net income. Wow, there must have been a one-time adjustment. Net income grew 58. Yeah, so the operating profit was 8.7, or it was up 8.7%. So still pretty good for Coca-Cola. So yeah, they probably won't outperform in the long run, but they're just such a safe company. Yeah, he owns some of the higher yielding plays as well, like a Chevron. Chevron, the gas station, if anyone's heard of them, they have a huge 4.4% yield. Payout ratio is only 67%. That's kind of the cool thing about oil stocks. They trade at low valuations. You get a high dividend as well. Duolingo's fallen off. What software is this? Oh yeah, hey, it's this software right here. If you want to get this little, this is a broker I'm using. If you want to download this software I'm on, it's in the link tree in my bio. It's the very first link there. It's also an affiliate link. It's a free app, but if you deposit $100, we'll both get some free stocks. So it'd help out the channel. But yeah, I love doing analysis on here. You can also see like the super investors portfolio and stuff. But let me go back to Palantir right here, because Palantir reported yesterday some really good earnings. Look at that. They're at $180 a share. Here's kind of the unfortunate part, though. The one thing I'm careful with is just the valuation is really high on Palantir. 123 price to sales. So not like price to net income, but price to sales is 123. Here's why they deserve a high valuation. I don't know about this high of a valuation, though, but look at this. 55% of the revenue comes from the government, like police stations. It's up 50% year over year. I mean, just ridiculous growth. Same with the commercial revenue, up nearly 50% year over year. Same with profitability, record profitable quarter, 330 mil in net income. Fortress of a balance sheet. This company actually has no debt at all and $6 billion of cash. Pretty nice. So, yeah, Palantir is a nice, I wish I owned them. What are your long-term stocks? Yeah, hey, it's this portfolio right here. If you kind of look in the top right, it's called my buy and hold portfolio. So yeah, basically it's my long-term account. Once I buy a stock in here, just hold it for the long term. And here are all the ones that I've picked so far. Coca-Cola, Amazon, Amphenol, DocuSign. DocuSign's an okay one. I wouldn't really recommend them. What do you think of CFG stock? What up, Chiefs? Let's see. CFG stock. I've not heard of this one. Citizens Financial. So let's see here. So a $20 billion company. So a pretty big market cap on this one. What's the PE ratio? So the PE is a 14. Industry average is a 12. Let's see. So yeah, they're just in consumer banking and commercial banking. That's most of their revenue. All of it comes from the US. Cool to see. And yeah, look at this net income. They're pretty much making $400 million of net income every quarter. And you get a near 4% dividend. Yeah, 3.6% yield, 55% payout ratio. So yeah, that's just a bank. If you want to switch to those, you get the nice yield. Yeah, so you gotta sell off DocuSign. Yeah, at this point, I'm just gonna hold on to it. Palantir will return to $70. Hey, I'd love to see it there so I can buy one. I have a question. Do you keep all your investments on one or different houses? No, hey, I have multiple portfolios here. I have like different goals with each account. Like we got some crazy losers in here today, like Super Micro and stuff. And all time, I love being fully transparent. I feel like no other streamer does this. So if you wanted to follow button, I appreciate that. By the way, I sell nothing. I have no course, book, Discord. I sell nothing. Watch out for people impersonating me. But we're up 13% all time in here. Up 6,400 or 6,700 all time in there. Then we also have our dividend growth portfolio. So basically every stock in here pays a dividend. How are we doing year to date? Yeah, we're up 10% year to date. Man, this April dip was crazy. We were at one point down like 15%. But yeah, this is my dividend growth portfolio. And we have a little Roth IRA as well. So, TSSI, what just happened there? Down 15% after hours. Well, that's not good. RIP $22 there. Maybe we'll look into them a little later. Probably we'll do that tomorrow. But let's get back. Out of all of these apps right here, my favorite one is this one right here. This little brokerage right here. It's lowest fee broker. I keep my idle cash in here because it earns a 4.10% APY for free. So hey, I earn a little 4 cents of interest. Why not? So anyway, again, if you want to get this app, I see someone asked, you want to get this broker I'm on? It's in the link tree in my bio. First link there. It's an affiliate link too, so we'll both get some free stocks. So let's see here. Let's keep going. Can you look at UPS? Yeah, let's go analyze UPS stocks. So I think this one actually has a bit of a risk. Oh, thanks so much, Chief A. Again, it should be in the description of the YouTube stream. But yeah, here's my link tree. Thanks so much if you want to use my affiliate link. All right, but here's UPS right here. Here's why I think this one might be a dividend trap, and I'll show you how to do this for yourself. I'll show you the numbers for yourself so you can draw your own conclusion. So most people just see the yield here. They're like, wow, UPS, 7.6% dividend yield looks great. Here's the one thing you got to be careful with, though, and here's why I think it might not be sustainable. So if we look at the net income, they made 1.3 billion this quarter, 1.2 billion last quarter. But just remember this number, 1.3 billion of net income just this quarter. And let's go to the cash flow statement to see how much the dividend cost. And the dividend cost 1.35 billion every quarter. So if they don't at least make 1.35 billion in net income a quarter, they literally can't afford the dividend. So if things don't change quickly here, I mean, the dividends are eating up their entire profits. They have no leftover money. So they actually have to technically take out debt from somewhere else, from their cash pile, and to pay off the dividend. Anyway, not good. I think this one has a real chance of actually a dividend cut. So that's the one thing I'd be careful with there. And a dividend cut wouldn't be too unhealthy. You wouldn't want something yielding that anyway. All right. Let's see here. Duo down just to 10%. Really? DUOL, Duolingo. Yeah, so Duolingo, wow, yeah, look at that. They're only up 8% right now. Wow. I remember when they first reported, they were up like 25%. So that's interesting. I wonder how Airbnb's doing. Airbnb reported earnings. Uh, Novo Nordisk reported. What's your dividends again? I can show you my dividends staying. There we go. Airbnb's down 4. Not good. So that's unfortunate. Someone said, "What's your dividends?" You know what? I really hope I don't show anything here, but you know what? I like being fully transparent. Let's go to dividends. So yeah, again, I don't get much. Like these are really small payments. I don't do it for the dividends. I mainly do it for the stock price appreciation. McDonald's is a good one. I used to own a lot of the higher yielding plays. Let me go scroll back a long time ago. I used to own. Look at this: TLTW, EXR, $101 dividend, NSA, $100 dividend, Arway. Dude, they paid a special dividend. I remember that. $240. I used to own a lot of these higher yielding stuff, but then I switched to the lower yield but higher total return stocks like a Meta, Google, McDonald's, Constellation Energy. So anyway, that's that. Oh, and here, you know what? I like showing this as well. If we go over here, year to date, we're up 23% in this portfolio. And here are the year to date dividends. So far in this one, we've received $93 in dividends. $8 from Disney, T Rowe, Molson, Clear Secure, Cal-Maine, $25 from Cal-Maine, the chicken egg producer. Anywho, sorry, that was the dividends. Someone asked about them, and I just like being fully transparent. If anyone has any questions about my portfolio, my lifetime return, or anything, I always try to answer them. I got nothing to hide here. By the way, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. I got none of that. Watch out for people impersonating me. Anyway, would you ever buy GE Veranova? I would, but I own a stock that literally does the exact same thing, moves with it, CEG. So um, they're both so exposed to the PJM pricing, which is done great right now, the electricity demand. So let's see, how much Cal-Maine do you own? Yeah, so check this out. I own 7 shares of this stock right here. Ticker symbol CALM. This is that chicken egg stock I was talking about. So this company has a 20% market share for chicken eggs. And if has anyone else recently been like, dang, egg prices are really high? Well, this company is milking it because they're printing money. They're making a couple $100 million in net income every quarter. This year-over-year growth rate's pretty ridiculous. They also have no debt. This is a completely debt-free company with how much cash? I'll find out exactly. Let's pull up the balance sheet real quick. Come on, Wi-Fi. Yeah, sorry, my Wi-Fi is kind of slow right now. If you want to hit the follow button, I appreciate that. We'll be live tomorrow too. I might do one later tonight. So look at this. Wow, $1.4 billion of cash, no debt at all. What's the whole company worth? They're a $5 billion company, so literally 25% of this company's market cap is just cash on hand. They're already at a 4 times PE, so if you do an X cash PE multiple, they're trading at a 3 PE. Again, they just sell a commodity, they just sell chicken eggs, but they're printing so much money, so they also have this crazy 6.5% dividend yield. I've never seen this. 6.5% yield, and the payout ratio is only at 27%. Anyway, Calm, I own that one. I might be biased, but there's your chicken egg stock. Where's my position? Calm right here. CALM, we're up 3% on them. So not a monster performer, but we're actually all time, we're up like over 10% on the stock because of the dividends. Like, look, this right here, it's $100 a share. They gave you $3.50 instantly. That's an instant 3.5% return. $3.50 out of 100. So 3.5% instant return just that one quarter. Anywho, they change their dividend every quarter. Sorry, I kind of get into that. All right. Yeah, chicken is the new gold. TN Nath, what's up, dude? All right. ROOT stock, let's check it out. Root, I think this is an insurance company, kind of like a smaller market cap insurance company. So let's see how they're doing. So yeah, first off, it's a pretty small one, a $1.8 billion company, but they've seen some crazy growth. Yeah, check this out. Direct to consumer insurance. Look at the growth here. I mean, it used to be, what was this number? Just clicked off of it. It used to be 70 million. Now it's 350 million just in the most recent quarter. So they've seen some pretty ridiculous growth in their insurance business. Are they profitable on that? Yeah, look at that. They're making like 20 mil a quarter now. So they're super profitable right now. The revenue's up 37, so they're earning a lot of premiums. Geez, look at that. It used to be 70 mil, under 100 million. Now it's 350 mil. So cool. They just seem really growthy. They're starting to make a lot of net income. They seem really interesting. Duolingo did go crazy, but I think they lost the lead on some of it. Let me go back to Duolingo right here. They're up 10% right now. So hey, no one's upset about that. TikTok just said your live is no longer eligible for you page recommendation. It is now restricted in search results. By the way, if you want to help me out, make sure to follow my YouTube account. I'm streaming on there as well. My YouTube channel is called Nathan Robert. Just type in a YouTube Nathan Robert. It's also in the link tree in my bio. Oh wait, dude. It says, here's why it's no longer recommendation, because it directs people off the platform. So now it's against the terms of service to tell people to go to your YouTube. That's crazy. Oh my goodness. I was wondering the reason. All right, then. That's never happened to me. All right. Anyway, we were coming up on the 2-hour mark anyway. All right, let's keep going here. We'll look at a few more stocks here. Yeah, if you guys got any stocks you want me to look at, let me know. I'll read every YouTube chat. What are your thoughts on the uranium and what are some good plays? Oh, yeah. So if we go to ticker symbol URA, this is the uranium ETF right here. So the uranium ETF is pretty much at an all-time high because nuclear reactors are powered by uranium. And basically this ETF, I would probably individually pick some of these companies. Like, honestly, the best one is ticker symbol CCO. This is, in my opinion, the best uranium pick. We're trying to no longer buy Russian uranium and uranium from all these other countries, and we want to be more independent. So this is a Canadian uranium company. So half the revenue comes from uranium, and they're pretty much at all-time highs. But if uranium continues to win, they're going to be a huge beneficiary. They're the largest, safest play probably out there. Or just buy the URA ETF. James said XRP. Yo, we don't really look at crypto on here, but I can pull up XRP. I mean, this is the cool kind of unique feature about crypto. You know, there's no earnings report. This company or this coin isn't going to miss on net income or they're miss on their margins. You know, they don't have to worry about that kind of stuff. So XRP is unique. It's just like Bitcoin. Was it in the link tree? Yeah, hey, Bun, my YouTube channel is in the link tree in my bio. My YouTube channel is also called Nathan Robert. So yeah, if you missed anything if you missed anything during the live, want to replay it because I'm about to end it in a little, you can replay it over there as well. And hey, what up, Ryan? Thanks for showing up to the YouTube chat. Let's see. Kevin said Arista Networks, ANET. Let's see, ANET. Arista Networks. This one's on my watch list. Yeah, they're at all-time highs today, up 17%. I remember they had really incredible earnings. Let's see right here. So yeah, they beat on revenue. They beat on net income by a huge amount. I mean, the analysts were expecting 60 cents of EPS. They made 70. And again, a huge EBITDA beat. So they triple beat on earnings like they normally do. I mean, look at this net income that they make. I mean, 888.8 million. Crazy. Yeah, they deserve to be at all-time highs. So profitable. Yeah, Miller's Reddit's going crazy. Ooh, Championness said NOW stock. So ServiceNow, yeah, this is a software play. So we kind of zoom out right here. The stock is the software companies have kind of been underperforming. Like if you look at Salesforce has been struggling a little bit. Yo, what up, Trapper08? Good to see you, man. And let's go see. So ServiceNow beat on every dude. They make a lot of net income. No way. Yeah, look at that. They're making close to 2 billion in net income a year. So they're extremely profitable. The free cash flow is even better. Yo, ServiceNow might actually be a better pick than Salesforce. Dang, man, I really like this service now. They have some really nice growth. Look at Kita. Hey, I don't know what that is. What's the ticker symbol for that stock right there? We can check it out for you, Matthew. I just don't know what that one is. Let's see. Hey, thanks, Ryan. I appreciate that. ASST. Yeah, what's up, Alex? Let's check it out. So this is asset entities. We don't normally really cover these kind of stocks. And hey, thanks, Trapper, for the rose there. I appreciate that. So look at this market cap. The whole company is worth 58 million. Again, I don't really like to buy the really small companies. You just can't trust them. But let's just judge them off their financials. So again, the whole company is worth $58 million. And let's go see what the net income is. So they're losing a couple million, not that much. I mean, 3 mil, 2 mil. And the sales, so yeah, I mean, look, the sales are 170,000 a quarter. So, I mean, they have 3 million of assets. So yeah, to be honest with you, nothing's really blowing me away here. It's just a really small company. You can maybe do some momentum stuff on that. But if I'm looking for a stock to just buy and hold forever, that one probably wouldn't be on my list. I look for a little more growthy one. All right, let's keep going here. Trapper said SIRI. So there's good news and bad news about this company. So you're basically just buying it for the dividend. Warren Buffett owns a bunch of it. So check this out. Warren Buffett's company, Berkshire Hathaway, largest shareholder. They own 35% of the shares. But you're mainly just buying it for the dividend because you get a 5% yield here. But it's kind of a dying business because if we go to the revenue or the Sirius XM business, I think this is like a radio. I mean, you can kind of see here the annual revenue is lower than it was in like 2019. It just isn't a grower. I mean, matter of fact, it's declining. So how about this Pandora platform down 2% year over year? So anywho, you just want to be careful with this company. The net income was only 200 mil, down 42. They had this little one-time adjustment. So anyway, nothing's really blowing me away here, just not really going. It reminds me of like a Comcast. Like I'd honestly rather buy Comcast in this one. And Comcast has a pretty similar yield. Actually, to be honest with you, bro, if you like this stock, you will love Comcast. Ticker symbol CMCSA. And I actually would consider Comcast. That's one I really like. Can AppLovin? Yeah, hey, AppLovin just reported earnings today as well. So Broadcom, yeah, let's check out Broadcom, AVGO. I love this company right here. It's kind of like NVIDIA, but with a higher yield. Flim said, what app is this? Yeah, hey, Flim, this is a broker that I'm on. If you want to get this app that I'm on, it's in the link tree in my bio, first link there. It's an affiliate link too. So if you're looking for a brokerage, this is my favorite one to use, one I'd recommend, lowest fee free. So anyway, a lot of people know Broadcom for their semiconductor solutions. That's half the revenue. But the main winner here is the infrastructure software. Look at this. It's up 25%. I mean, from 1.9 billion. It used to be 1.9 billion every quarter, 1.9 bill. Now it's, 6.6 billion. It's seen incredible growth. It's done wonders for the free cash flow. The free cash flow was up 44% to 6.4 billion of free cash flow just this quarter. Net income was 5 billion. So anyway, incredible growth on Broadcom, and they have like a 1% dividend yield. So they're cool. James said CRDO stock. What's this one? Oh, Credo Technology. I don't own this one, but they're on my watch list. I actually do like this stock. So they are at an all-time high right now. So congrats if you own this one before today because they're at an all-time high. Here's what I really liked about them. So check this out. I love growthy companies, and this one has a lot of growth. Revenue went from 60 million to 170 million, up 180%. Really crazy growth, and also a fortress of a balance sheet. No debt, lots of cash. Cash is earning interest. So anyway, just super growthy. I can see why they're at all-time highs. Usually the financials explain why a stock is either doing really good or really bad. Let's see. Gumbo said MSTY. So here's the thing about MSTY. This is a covered call ETF, and it sells covered calls on MicroStrategy, which is basically Bitcoin. So you're basically selling calls on Bitcoin. Bitcoin's at all-time highs. It really hasn't been the move, and that's kind of why this one hasn't really done too much. So I don't want to hate on this ETF, but you're buying this to maximize your dividend income, and that's okay. But the thing is, this won't outperform in the long run, in my opinion, um, just because of the nature of selling calls. And it, like the dividend here, like this is, it's hard to sustain. You can't. 153% dividend, like you're supposed to get 8% a year. S&P 500 a year. So anyway, it's too good to be true, in my opinion. That's why this is at kind of an all-time low. So anyway, I'd be careful with MicroStrategy. You just buying it to maximize your dividend income. It's a covered call ETF. Kita is backed by Eric Schmidt. Just type in Kita. You know what? We'll type it in. Yeah, sorry. Let's see. Kita. Yeah, I can't find that one. It might not be. I need the ticker symbol. It probably isn't on my exchange even. I'll type it in one more time. Kita. Yeah, can't find it, man. Sorry about that one, Matthew. Let's see. Yeah, MicroStrategy. I'd rather own MicroStrategy than MSTY. Yo, Marie, I would cover DKNG, but this is an industry I unfortunately can't cover because every time I cover it, the stream gets taken down just because of the industry that they're in. But, I accidentally kind of showed it. But the one thing this company's struggling with, and I think why the stock is flat, is because this net income positivity. They really haven't been able to make any money for years. I mean, the trend looked like it was starting to get net income positive, but so that's kind of why I think this stock has been flat for a while. They're struggling to get net income positive, though the growth is pretty good. All right, let's see. Sell your own calls, and yeah, that's what I recommend. If you have a lot of capital, don't put it in a covered call ETF that already has a 1% expense ratio. So the covered call ETF holders admit that the covered call ETFs do not outperform the S&P 500 in the long run, and the S&P averages 8% a year. These covered call ETFs already have a 1% expense ratio fee, so already you're losing 1/7 of your yearly return to expense ratios, and that compounds every year. So that's one thing I'd be careful with these high expense ratio covered call ETFs like an MSTY. Like, check this out. Let me see the expense ratio. So yeah, look at this. Expense ratio is a 0.99, so that's 1%. Anyhow, I think you kind of get the point there. All right, sorry. Let's see. User said FINV. Yeah, sorry if I missed any of y'all's stocks here. If you guys got any last minute stocks you want me to look at, let me know. We are coming up to the end of the stream here, so I do appreciate y'all being here. By the way, best way to support me, go subscribe to the YouTube channel. YouTube channel is called Nathan Robert. I'm streaming on there as well, so if you miss anything, you can replay it. And hit the follow button too, because we're going to be streaming tomorrow for huge earnings. Like 20% of my portfolio reports tomorrow, so major moves. Huge chunk of my portfolio reported today, like McDonald's, Disney, AMD, Supermicro, Powell Industries, a lot of earnings reported. Anyway, let's get back to FINV stock, Finvolution. Haven't heard of this one before. A $2.2 billion company. So an all right market cap. They're in loan facilitation, guarantee income. I need some of that. Post facilitation service fees. So they're in financial related. And yeah, look at, oh, wait, hold on. First off, I thought this was in US dollars. That's actually in Chinese. So we're going to convert the revenue to US dollars. Still, this is good. They're making this. So first off, this is a Chinese company. Beware. And then, but second of all, they're making, this is good, like 100 million in net income a quarter now, up 38%. Pretty good balance sheet. Does all the revenue come from China? Let's see. Yeah, so 80% of the revenue comes from China. Then they're in Indonesia. So hey, looking for, I guess, a Chinese fintech. There you go. Let's see here. ORLY. Wait, NPWR. Wait, let's see. NPWR. Net Power. A $590 million company. So not that big of a market cap, $590 million. But let's see how much they're making or losing. And this is the one huge red flag. Is that real? Hold on. So yeah, the whole company's worth $590 million. And literally just this quarter, they lost 373 mil and 100 mil last quarter. And the revenue was 12. I can see why this one's at all-time lows, but again, you got to be super careful with these small micro caps. Keeping Duolingo for the long term. So yeah, hey, that's 50% of your portfolio, Millers. That's a bit. That's a lot. Even I would not have half my portfolio in just any company, even if it was Microsoft. But hey, they have been a winner and they won today. So let's see, ORLY. So this is O'Reilly Auto Parts, a very buyback friendly company. And look at this. If you have a flat tire or like problems with your air conditioning, like you're going to get that fixed, even in a recession. So recession resilient company that literally spends all their money on buybacks. So O'Reilly does not pay a dividend. But they spend all their profits on buybacks. So look at this. They're making about 600 million of after-tax net income a quarter. What are they doing with 500 million a quarter? Well, I'll show you the buybacks that they're doing. We go to the cash flow statement, and where are buybacks? Right here. So yeah, literally, they spend all the money literally just buying back their own stocks. They're spending like $2 billion a year buying back their own stocks. So yeah, if we look at the net income's up 7.3, but your return as a shareholder, the EPS should be up more than 7.3, probably around 10%. Yeah, look at it's up 11% nearly. So although the net income was up 7, you're up 10.9. So that's the power of the buybacks that they're doing. Gives you more ownership in the company. There's less shares that exist, so you get more net income. It pretty much instantly makes the stock go up. I love buyback friendly companies, and that's been a huge reason of AutoZone and O'Reilly's crazy stock price appreciation. It's been their shareholder friendly buybacks. Could you check out IBO super quick? What up, Michael? Let's do it. IBO stocks. So Impact Bio. So again, hey, we don't really cover these kind of stocks on here. Check this out. The whole entire company is worth, the market cap is how much the whole company's worth. This is a $7.4 million company. So I'm not even really going to cover this stock. No revenue right now. Lost a mill. Anyway, I'd be super careful. They give employees stock, O'Reilly, you can ask for half pay. Really, Ryan? That's actually really cool. That motivates, that's a good workforce culture. When they pay employees with stock, they're motivated to like go above and beyond, even if they're not like paid for the extra effort because they own some of the stock. They want the company to thrive and do good. That's the same with some of these other companies on like Carlisle. Every employee, even if you're a janitor, you get access to stock as part of your pay. Anyway, oh, that's nice, Millers. That's awesome. You're just getting started. So Jason said CATX stock. Let's check it out. What were OXY's earnings? Let's check that one out too. CATX stock. So Perspective Therapeutics, again, another really, really tiny one, $280 million company. The stock has not done too well. So especially if you go back to the weekly, this stock is the same price it was back in 2017. So do beware of that. So $200 million company and Branchy Therapy, or maybe that's how you pronounce it. They're losing like 20 million in net income a quarter. So nothing's really blowing me away here. Yeah, look, sales of 300,000, losing 20 mil a quarter. An okay balance sheet, actually, an all right balance sheet. That's the one all right news. But yeah, tough. No sales there. It's hard to trust them. So let's see, OXY. Hey, that's actually a company that Warren Buffett owns a bunch of. So if we head over here to the super investor watch list of Warren Buffett's portfolio, he owns a lot of the higher yielding names like Bank of America, Coca-Cola, Chevron, and then he has 4% of his portfolio in Oxy Petroleum. So this is another oil and gas stock. And hey, check this out. Software's telling me there's a bearish symmetrical triangle on them. So oil stocks have nice yields. This one has an okay yield, a 2% plus yield there. Let's see. Here's kind of a cool stat we get. We can see their realized price of oil and natural gas, net sales volume per day, 1.39K. Oh, well. So yeah, basically 83% of the revenue comes from oil and gas. Then they're in chemicals. And yeah, they're pretty much making $1 billion in net income every quarter. OxyChem, shout out Texas. Hey, yeah, you love those Texas oil stocks like TPL, Lambridge. All right, let's see. Yeah, that one. I'd probably rather go with like an Exxon or a Chevron for a higher yield and maybe Same appreciation. Didn't Buffett sell a lot of his stocks? Yeah, he sold. That's the thing. Warren Buffett sold a bunch of Apple, but look, after selling all that Apple, it was like a stupid amount, billions. He's still 21% of his entire portfolio is in Apple. So yeah, he owns some other companies like Chubb, the life insurance company, I believe, Kraft Heinz, the little ketchup stock, um, and Moody's, the credit rating company. Moody's has like an oligopoly, shared oligopoly with S&P Global in the credit rating industry and Fitch. So yeah. Thomas said, what do you think about CPRX? They reported earnings today. Let me go to the earnings hub again so we can see what companies reported earnings today. This is really interesting. I'll be super quick about this as well. So we'll see how Airbnb did. Is it okay I've invested 50% in one stock because my portfolio is at 1K? I think you'll be all right. But as that portfolio grows, you want to definitely be more diversified, in my opinion. Again, not financial advice here. But let's see. TPL reported earnings. How'd they do? They're not moving. Anyway, let's go to the real movies here. So AppLovin, they are, they were down at one point to 340, then they went to 360, and now they're going green. AppLovin's going green. That's crazy. Airbnb, if anyone's heard of Airbnb before, they're down 7% after hours. You know, they own no houses, but they collect the high fees for their platform. Let's see Duolingo. How are they holding up? Up 15. Nice. Duolingo's up 15% after hours. TKO, which is the WWE. This is actually a really niche stock. This TKO stock, perfect ticker symbol, they own WWE and the UFC. So cool little company there. How'd Royal Gold do? Royal Gold's not moving. So that was pretty much everything from reporting earnings. The last one is CPRX. This is a stock that I own. How'd they do? So yeah, they're not really moving right now just because this is such a small market cap company. Adjusted net income of 86 million. Let me go to net income down here. That's a record. Man, last quarter was 56 million. They just made 86 million net income. Maybe they'll go up tomorrow. That'd be great to see. Kraft Heinz is a good one for, hey, Kraft Heinz doesn't move much and you get a nice dividend. B69 said CRWV. Hey, that's CoreWeave. Huge holding by NVIDIA. So you know what? Let me go back to NVIDIA's portfolio. Oh, let me move my cursor. So actually, we can see NVIDIA's portfolio as well. And their largest holding out of any stock is actually in CoreWeave. And they bought a bunch of their stock at like $40 a share. I think they own like 8% of the company now. But they just IPO'd, so we don't have too much data behind CoreWeave. But here's what we do have this one quarter. Look, 2024 Q1 to 2025 Q1, revenue grew 420%. I mean, that's the kind of growth I want to see in a company. So incredible growth there on the revenue. I mean, nearly 1,000% revenue growth to $1 billion. Oh, hey, Lululemon stock too. Yeah. Hey, CoreWeave also acquired CoreZ, which is like one of the largest Bitcoin mining companies as well. So yeah, well, let me look at UNH, then we'll look at, LULO, Lemon. I think you mean Lululemon, right? Yeah, we can check them out too. So yeah, here's UnitedHealth stock. Man, this sector has been not in favor by the government and the regulators. They're not too happy with the Medicare, Medicaid companies. And the PE has collapsed because the future is so uncertain. Like this is the lowest PE they've ever traded at, 10 times PE, which is net income. That's what the PE stands for, price to earnings, price to net income. And they got a 10 PE. So this company could their net income could fall another 30%. And it's like pretty much priced in. And it'd still be reasonably valued. But we use the OptumRx business. It's seen some massive growth. But yeah, we're really just watching what happens to the net income right here. The margins are starting to fall. You go to the net margins, which is, again, this is already expected. So nothing new here whenever this loads. RP, yeah, look, so a 3.2% net margin, down 30% year over year. So you also get a nice yield with UnitedHealth Group. You get a 3.5% dividend with this company. So yeah, I think it might be worth a nibble. I would not have them as a huge position, but I think it might be worth a small quarter-sized position or something just to get exposure to. But let's go look at Lululemon now. Heck yeah. So Ramada said, hey, what platform is this? Hey, yeah, if you want to get this software I'm on, it's actually a broker that I'm using right here. go to the link tree in my bio there. It's the very first link if you want to get it. It's an affiliate link too. So if you go on this brokerage and deposit $100, we'll both get some free stocks. So it helps out the channel. So thanks. But anyway, it's my favorite app for analysis, lowest fee. I have tutorials on how to use it as well in the link tree in my bio and on my YouTube channel. But here's Lululemon. The stock is at like a new 52-week low today, which is unfortunate. The PE ratio has collapsed to 13 PE. I know they sell commodity like shorts and leggings and stuff, but a 13 PE is really cheap for a company that has such strong like net income right now. I almost trust Lululemon more than Nike. Here's one reason why they're kind of falling is because the margins have started to collapse. So look, if you go to the revenue year over year, the revenue is like up, but the net income's down. Come on, revenue. Yeah, hey, the Wi-Fi just doesn't want to work today, apparently. So if you wanted the follow button, I appreciate that. So look, the revenue's up 7.3, net income is down 2. And what that again means is just the margins are being hit, down 9% year over year. So, but still, they're making a couple $100 million in net income every quarter, and they don't pay a dividend. So they are retaining all those earnings. They could do buybacks. They are doing a little bit of buybacks. They could invest in themselves, buy a company, all without having to dilute. So what up, Jay? He said HPQ stock. What's this one? HPQ. Let's see. Nebius Group is tomorrow. Yeah, we have a lot of fun earnings tomorrow, like Monster Beverage, Constellation Energy. I'll pull it up as well toward the end here. But HPQ stock. So $24 billion company and only a 9 PE. So let's see. Yeah, crazy yield here. Check this out. You get a 4.5% dividend yield here. And the PE, which is the net income multiple, is a 9.6. So low PE. So yeah, this is, they just sell commodity. They just sell PCs, printers, I guess, printing. Yeah, not too good. It looks like it's slowly declining. Personal systems revenue, that's up 7% year over year. What about net income? Let's go see the net income down here. So yeah, this is the bad news. Looks like the net income is, after falling 42% from the previous year, it used to be a bill. It fell another 33%. So that's the one thing you do gotta watch. It's making the payout ratio go up as well. So let me look at Nebius Group as well. You know, that's a stock owned by NVIDIA. So if we go over here, to NVIDIA's portfolio, another one of the stocks they own is Nebius. And there's one thing I really like about this stock. It's the growth of it. So if we go to revenue right here, look at this. The revenue went from 11 million to 55 million. You know, at this growth rate, what's the revenue going to be this time next year? So I love the growth there. They are still losing 100 million of net income every quarter, so you do got to be careful about that. But yeah. Anyway, that was pretty much everything I wanted to cover. So hey, if y'all want to hit the follow button, make sure to hit the follow button. We go live every day. We just look at stocks and stuff. I sell nothing too. I have no course, book, Discord. Watch out for people impersonating me. I don't got none of that. But tomorrow is a really fun stream. So check this out if you want to come by to tomorrow's stream. Here's everything that reports tomorrow. Eli Lilly, which is huge. Constellation Energy, I have 5,000 in that stock, so we'll see what happens. Motorola, which is a huge government security company. Monster Beverage. Let's see. GoDaddy, the like URL company. Domain names. Pinterest. Rocket Lab, Celsius, the drink, Maple Bear, which is Instacart, Chime, SoundHound, Sezzle. That'll be interesting. Yeti, has anyone heard of like those Yeti cups, the Yeti coolers? Y'all know they're Republic, ticker symbol Yeti. Yelp, the review company, so NerdWallet, Funko Pop. Yo, this company's going bankrupt. Anyone seen those like collectible Funko Pop things? Well, this is a $190 million company that burns 30 mil the most recent quarter. Anywho, that was the stream. Hope you guys have a great rest of your day. Again, if you want to download this app that I'm on, it's my little favorite brokerage to use. It's in the link in the description, or it's actually in the link tree in my bio if you're on TikTok. I'm streaming on both YouTube and TikTok right now, so it's in the link tree in my bio, first link there. And yeah, see you guys in the next one. Have a great rest of your day. Make sure to hit the follow button if you want to see me on the next one. See ya. And thank you all for y'all on the YouTube stream. I'm trying to build up the YouTube channel.